that's it. Right? So it's just running that.
All right, so mic check Twitch. Can you guys hear me on the Twitch? Check, check. All right, some people can hear me. That's good. Okay, we have a special guest today. My guy, Will Hunting. All right, just give it a minute, let people settle in. So, first of all, let's go like this tweet, because you know the Twitter gatekeepers, they don't want us to win, right? So whoever's in here, just hit a like on that tweet for me, and then we could get started shortly. I see like Bitcoin just did like something weird, right? Just dumping. We got like a FOMC candle. That's because we got a special guest today, man. He had to show his dominance before the stream started, you know? All right, guys, let's go. Hit the like on this tweet, and then we'll start shortly. But shout out to everyone that has tuned in so far. You know, I think more people will join as we start. How is the music to mic ratio, guys? Do you guys hear the music loud? Is it low? Like, how does that sound? They said what music? Okay, so let me just higher it a little bit. Then should be good now. All right. So we'll start in 1 minute. In 1 minute we'll start. Thanks to everyone that has tuned in so far. Should be a fun stream. Should be a fun stream. We can talk about Bitcoin, talk about everything. Bitcoin is dumping right now. All right, so let's start. So let's get a mic check on Will. Will, if you can hear me, do a mic check real quick.
Hey, man.
Can you guys hear Will? All right, good. Cool, great. So they can hear you. Perfect. All right, so let's just start something different this time. Usually we talk about Bitcoin to start. Let's start with an intro. The special guest, Will. So feel free to do an intro, and then we could talk about, whatever.
Sure. I'm not sure there's many people on the stream who probably haven't seen me lurking around Twitter on CT and what have you anyway, but yeah, Will Hunting. I've been trading for about 16, 17 years almost. So been around the block. Started out trading commodities, FX, and then transitioned to crypto a few years ago, and this year actually starting to transition back to trading FX, man, because I go where the volatility is, right? But master of all markets, right? That's what we're trying to do, and yeah, just working at it, man, working at it.
It's good to know. That's good to know. So, for the new people in here, they see, I'm sharing your screen right now. They see like trend lines. They see some symmetry going on, right? So, explain to the people like what brought you to trade with trend lines or trend walls, shoulder walls, or whatever, and what's your favorite market condition to trade?
Yeah. Okay. So, I mean, look, I think there's always kind of this debate that takes place about whether you should be using horizontal levels or whether you should be using trend lines or whether you should be using indicators or Fibonacci or some other form of technical analysis, right? But I've always been attracted to using trend lines. I can look at a chart and I can see where they belong. But the secret to any form of technical analysis is that whatever technique you're applying, it needs to be repeatable, right? Because if it's repeatable, then you're applying the same technique in the same way every single time, and then you can expect the way that price action is going to play out, the way the patterns are going to play out themselves are going to repeat. And actually, what you're really trading when you're trading is the pattern of behavior, right? You mark a level on a chart, you draw a line on a chart, you're expecting a certain level of behavior, you're expecting a certain pattern of behavior, and when you're trading, what you're doing is trying to take advantage of that pattern. So drawing lines and levels, what they do is they allow you to identify the patterns, right? And I mark lines, I draw them in a very particular way, and I draw them in the same way every single time. And because I'm doing that, I just have this expectation that the patterns would repeat. And I think the bottom line is, it's really support resistance trading, right? But it's finding support resistance on a diagonal plane rather than looking for it on a horizontal plane. So I don't know, if you're trading traditional kind of SI, you'd say, hey, here's my level. It's been drawn a little bit wonky here. Actually, I don't know if that is my drawing coming out on the chart, or it's not showing.
Yeah, it looks like it's coming out.
Coming out. Yeah. Okay, I'll do it. Okay, I see what happened. It's I have kind of a few screens here, and they will freeze when I go to the drawing tool. Okay, so I mean, if you're trading horizontal SI, you have a horizontal level, and from a support resistance perspective, usually what you're kind of thinking is, hey, if it was support, then I would expect this type of reaction to take place. So we have this support area. Maybe the price has bounced here. Once it's breached, it's going to come back, kiss back. That same place is going to become resistance, right? And when we're drawing lines, what we're doing is we're finding that exact same relationship, but instead of happening on a horizontal plane, it's actually happening on a diagonal plane. And what I have are a number of different points where I would mark my lines from, where I mark my walls from, and just in the same way that people study price action, and they study where they're drawing their horizontal levels, and they're looking for a consistent behavior at that horizontal level. I'm doing the exact same thing but with diagonals, and I'm looking for a consistent pattern. I'm looking for a consistent pattern of behavior rotation around those diagonal levels that I've marked.
I see. That makes sense. So it's like for the people that kind of didn't understand, it's basically like you're using straight lines, but in a whatever, like a diagonal instead of a straight line, basically.
Yeah, well, I mean, if you take that horizontal level and you elevate it a few degrees, I mean, in terms of the pattern of behavior that you're looking for, the pattern of behavior actually is exactly the same, right? What you're looking for is support and support breaches, and it becomes resistance. So you're looking for resistance and resistance breaches, and then that becomes support. And the only kind of question is, okay, that's the relationship that we're looking for when we're using TA. It doesn't matter whether you're using Fibonacci or moving averages or anything else. That's the actual relationship that you're looking for in terms of price behavior. And then the question is, well, what is the most consistent tool that you can use in order to discover that pattern of behavior and find that level? And what I've tended to find is that whenever there is a significant swing high in the market or a significant swing low, usually what you will find is that there is a diagonal, there is a line that you could have drawn that would have been able to predict that exact place where the high would have occurred, or that exact place where the low would have occurred. And so if you kind of look at all the charts which I've been posting out on my Twitter timeline, and I've been a lot more kind of careful this year, right? Because I've just been posting the swing trades only rather than the kind of intraday SR tap levels. But what you'll kind of realize is that actually wherever the market is turning, it can be predicted, and it can be predicted with a huge degree of consistency, right? Which I think that a lot of other trading strategies don't provide.
I definitely agree with your point, because I'm not gonna lie, I learned this type of trading from you. Like, I saw one of your videos, I think I mentioned it before, but it was like the traditional way is to do the regular straight support resistance lines and wait for price to break. And then what I noticed is, like, these diagonals, the market is reacting for some reason at these diagonals, but it's like less people have them on the chart, if that makes sense. Like, you see your extended diagonal right now. I don't think many people will have that same diagonal on the chart, or like the channel you have going, right? But the market is giving reactions there, and I see you have double confluence with a midpoint, and then the other trend from the left from June, I guess. So it's like you have double confluence, but many people don't see that, right? Many people don't have these on the chart. So I feel like when I used to trade just purely diagonals, like, it made me money. And then, like, I got mixed up with order flow, and then, like, I try to use order flow with the diagonals, and it just didn't work out, right? But I could definitely see, like, why it plays out, because it's just like easy. You have easy rules, right? If you want to explain the rules on, like, your trend walls, feel free to go ahead. Like, if you want to zoom in on the chart, right? Let's go to, I guess, a closer look on the current diagonal you're at, and just explain, like, what type of rules you have, and, like, what would allow you to enter the trade.
Sure. I mean, okay, so I'm going to be a little bit careful here from actually trying to make a call on this right now. Well, the reason is, right? The reason is that this actually already played out, right? And I posted that short on my timeline.
Yeah, I remember.
But yeah, we kind of had a nice, decent 20% correction here, which I'll talk a little bit more about in a moment, right? But what I'm actually kind of looking at right now with Bitcoin from an analysis point of view is that as long as the price is kind of remaining crudely above the area that I just marked, then what I'm actually anticipating is that there should be another extension in Bitcoin, and that's why I'm kind of I haven't positioned. I'm not positioned on Bitcoin right now, right? I'm kind of in wait and see mode. If she flips that level, then at that point I might start thinking, okay, we're resuming the downward move. But as the price action stands at present, what I would be actually thinking is that there would be an extension. Once we've had that extension up towards the 34K mark, then at that point I would maybe be thinking of a bigger rotation, right? So it's a lot of if then, but when, if this, then that type of scenarios right now, right? It's not something that I'm ready to push, launch a full clip at, right? But and so a little bit of a wait and see game. But if we're looking at the diagonals themselves, I don't think we're gonna have enough time to go fully into explaining these techniques. And I teach people how to do this, and it takes like 3 days plus 1 year to actually get there, right? But I mean, if we look at the actual diagonal that I've got drawn here, and we start thinking of it from that support resistance perspective, well, what we're looking at structurally in the price action is that the price went over, and then it came under and it rejected, and then it went up and then it rejected, right? And then we could anticipate that it goes up again and it rejects. And this is what I call a line of symmetry, right? So I think that's what you were referencing earlier, that is the symmetry in the market. And you can kind of see, had that been a horizontal, the kind of price action that you would be looking at is something like this. As it just happens, it's that exact same thing, but it's actually happening on it's happening much more on a diagonal plane, right? And so once you start, once you're able to kind of make an assessment of where that line of symmetry is, it actually puts you in a position where you can be looking for that swing rotation trade, right? And so as far as kind of as far as Bitcoin is concerned, I'm still looking at that same chart which I've been looking at for the last 3 months, right? The level hasn't changed, the technicals haven't changed. We're talking about the kind of big picture view, and then it's just a question of if it happens that Bitcoin goes there, then I know what I'm doing, right? And if it just happens to collapse from here, from where it is, I'm sitting aside and I'm not doing anything, right? But I only want to play when I think I have an edge. I only want to play when price is at a place where I want to do business. And if it's not at that place, then I'm not going to be in the game, right? So, I trust my trades when I'm trading with my technicals. And outside of that, if price is not giving me an opportunity, then there is literally nothing for me to do. So I don't know, I guess, a lot of guys have been following me on Twitter, and if you're kind of looking at all those swing charts that I was posting, I mean, I must have posted in the first quarter the better part of a dozen plus trade ideas or something, and in this second quarter there have been barely 4 or 5 swing trades, right? And that's the game. You want to play when you think you have a chance of winning, right? Rather than to play and to try and take every shot. And when you're trying to do that, that usually is the fastest path to ruin. And so the game isn't about being in the game. The game's about making money, and then waiting for those opportunities, waiting for those market conditions that would allow you to do that. And so as they say, it's not the rules of the game. The rules of the game are the same for everyone. It's how you play it, and that's how I choose to play the game, and that's why I've been around and survived for such a long time, right? Otherwise, Yeah, you know, I'd be there at the McDonald's, bro. Next to
Yeah,
you.
I definitely
Next to
agree.
you. Yeah,
Like,
bro, we could work a shift together, bro.
yeah, for real. We definitely could do a shift together. I'm not gonna lie. The way I trade sometimes, like, I'm gonna end up in a shift one day, you know? Cause, you know, like, the way you trade is very, like, you have a lot of discipline now. You 16 years in the market. Compared to me, I'm like, uh, I would say seriously, like, from 2019, 2020, so maybe like 4 years seriously. But you know, trading crypto, you see like so many cycles. You see like you basically see every single price action any market can offer. I've been a part of a flash crash, you know, in March.
Yeah.
I remember in October the Chinese guy, what's his name, Ji Xiao. We called him I call him Jin Xiao, the president of China, because you know that's a League of Legends player. So he pumped the market and it dumped quickly. Like it went from like 10.5k to like 7k in like a few weeks. So I seen a
Mm.
few crashes, and you know I learned, but I still feel like you know I'm always growing as a trader, and but the way you trade, the way you approach the market is just like in a disciplined manner, which I think is necessary to survive the game, right? So like you understand your market condition and when you can outperform, and like you said right now, like you're waiting for the market to go up, right? And if it
Sure.
doesn't go up, then you're not gonna enter a trade, right?
Yeah, exactly. Right,
For
exactly.
me, it's kind of different, right? I'm in my sleep dreaming when I'm gonna short this piece of shit market, right? So I'm always that's the thing, like with me, like I noticed like my mistakes as a noob trader is like a lot of times, you know, my mess ups in the market are because like I want to be in a position, right? So
Mm.
that's like a lot of new traders, right? And even myself, like they always feel like they have to be exposed to the market. So
Yeah.
so it's like as I'm like as I'm trading more and more, I understand like now it took me like probably 3 years to understand what market conditions I can outperform and whatnot. But I think like that only comes with experience, right? Would you agree?
Well, yes, but right, it's gonna be a yes and a but, right?
Here we
Because
go with the
there's
butt.
I think what happens is this, right? What happens is this is actually a lot of traders when they come to trading, what they what they're kind of doing is they everything becomes about having a trading strategy, right? And people dive straight in trying to learn various trading strategies, trying to learn various forms of technical analysis, macroeconomics, and everything else, right? But the starting point needs to actually be to look at the market that you're planning to trade and say, let me try and understand the market that I'm trying to trade. And if I understand the market I'm trying to trade well enough, then I will be able to find a strategy that suits trading this particular market. And I always kind of give hunting analogies. I think a lot of people give hunting analogies when it comes to talking about trading, and it's really freaking cliche, right? But you know, if the shoe fits, you've got to wear it, right? And so like what you know, when people come to me for coaching and mentoring, the place that I start with everyone is the same place, and I say, listen, you know, before we actually start talking about trading strategies, before we start talking about trade entries and risk management and everything else, if you're going to be trading, for example, Bitcoin, let us study Bitcoin and let us understand something about the characteristics and qualities of Bitcoin as an instrument. And once we've understood that, we're going to be in a position to be able to trade. And it's a little bit like I said, if you're going hunting and you're going to go I don't know, duck hunting or something, you want to know, what does a duck look like? What does it sound like? Where does it sleep? What does it eat? What direction does it fly in? What does its shit smell like? Right. And if you understand those things about that animal, then you'll probably have a successful hunt. Well, if you're going to be trading Bitcoin, then at the bare minimum, you need to know how many waves typically tend to form over the space of a year? If you know the answer to that question, it will end up determining the way that you trade and the way that you try to trade that market. And I'll dive deeper into that question in a minute, right? But that's one thing you want to know, is how many waves would I typically expect to form over the space of a year. You'd want to know what is the size of a typical extension wave. When Bitcoin is trending, how much does it tend to move in a trend before a correction happens? You need to know that. When Bitcoin is making a corrective move, what is the size of a typical corrective move? You need to know that. You need to know what is a typical daily range, what is a typical weekly range, what is a typical monthly range. And I would go as far as saying that if you did not have the answers to these questions, then actually you have no place trading Bitcoin or any other instrument, right? Because you're literally operating in the blind, right? So but once you understand these qualities and characteristics, then it will actually influence and it will impact the way that you trade. So I don't know, if you allow me a little bit of time, I'll take that first question, right? And I'll show you the wave count. Yeah.
Yeah, for sure. But just to get on your point, I think that's a very good way to, start off someone trying to learn trading, right? Is to understand like the market. Like for me, I've been trading like Bitcoin, and it's pretty much just Bitcoin a lot. So the point when you said like you gotta know the waves and how it trends and whatnot, I think that's really important. Some numbers I have in mind is like Bitcoin will correct like 10%, right? Usually. So like on a 10% downside, it's a good opportunity then to like look to scale into spot at minimum, right? After it corrects to the downside at 10. As far as the upside, I'm always kind of, Bitcoin did 50%, over 50% this year on one, and then the second time 22%. I feel like these are the largest rotations, right? And then at the beginning of the year, 45%. So like just by looking at this type of data, like a new trader can see like the favorable condition would be to buy dips, right? Would you agree? Like if you buy dips in the long term, it would be more favorable than trying to short everything, correct?
I think that depends on.
See, I try to turn you into the bull. You wasn't having it.
Ain't gonna happen, bro.
I was trying to get you into being a bull, man. I know you a bear.
Bro, I'm switched on today, man.
Yeah, I was trying to catch you slipping.
I've got a bottle of cherry coke here, man, that I've been sipping on all afternoon, right?
So you're awake, right?
Yeah, you're not gonna get me today, bro.
All right, cool. You can further explain your theory, but I just wanted to let people know that you're basically talking about rotations on daily swings, like 10% down, 15% up. Like you should know these type of things.
Oh, for sure, right? But so, I mean, look, if I've marked off the Bitcoin charts just to kind of show you 21, 22, 23. I'm on an 8-hour time frame here, so we're looking at a little bit of a big picture kind of view. And I'm saying, look, how many waves typically happen over the space of a year, right? So when it comes to counting waves, I tend to count when price is making a higher high or a lower low. If price is kind of flatlined, I'm not going to count inside the flat line where I'm going 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 endlessly, right? So if I'm doing a wave count here, I'm saying 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 waves that year. And then in 22, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 16 waves in 21, 12 waves in 22. And whether you agree with my count or not, it doesn't really matter. If you counted half as many or you counted twice as many, it doesn't matter, because regardless of whether you come back and say 10 or 20 or 30, if you average that out over a month, what you're really looking at is you're saying in any given month there are going to be 1 or 2 or no swings at all, right? That's the actual conclusion you come to when you do a wave count like this. Now, take that information in for a moment, right? In any given month, there are going to be 1 or 2 potential opportunities to catch actually a swing rotation, right? That is all. Now, if you look at the behavior of most traders, right, where most traders are going wrong, and I'm really kind of addressing the point here where you're saying, like you're very disciplined and you're patient and you've got the experience to be able to do that. And what I'm kind of saying is, it's not about how long you've been in the market, right? It's about how you understand the market. I'm patient because I know there's only 1 or 2 swing opportunities, right? So I can wait. Whereas most traders will be taking 2 or 3 trades a day, thinking that each trade they're taking is the next big swing. And so, someone is taking 100 trades a month, thinking he's catching a swing. And that thing about where people say, the winners look after themselves. You need to be careful about your losses. It really starts making sense, because in that situation, you kind of realize if someone's taking 100 trades a month, they're definitely catching the 2 winning trades. The problem is the other 98 trades they're taking. And what you kind of have to address is, why is it that you're taking so many freaking trades in the first place? And the answer that I have, or the kind of conclusion that I arrived at, is that the reason that people take so many trades is just they have no idea about how many rotations to expect in any given time period, right? If you know that there's only 1 or 2 opportunities in any given month, you're going to conserve your ammo a lot more. You're going to be a lot more careful about when you're going to fire a clip, right? And so, when you do this exercise, there should be a healthy dose of kind of discombobulation, where you realize that you're trying to do something and the market behaves in a certain way. And either the market is going to change and start giving you 100 swings a month, or you need to adjust and change your behavior to match what the market does. And what I'm saying is, dude, the market doesn't even know you freaking exist. Not with your 1 lot trade, right? Not with your micro lot positions and $100 stops, and the market doesn't even freaking know you exist, bro. Right?
Well, I'm telling you, man.
Yeah. So who's gonna change, right? Who has to change, right?
That's not true, sir.
Change the way you behave, or is the market gonna change?
You must not know about the cartel, man. They hunt $500 accounts every day, man. Come on.
Listen, man, $500 accounts on my reply guys, man. Right? They'll be like, it's like literally, right? Listen, I sold Bitcoin, okay, and the price goes dumb, right? Drops 20%. It rallies back up here, and there's dudes messaging me going, "How's that short going, bro?" And I'm like, I'll just clasping my head, man. I'm like, I don't know, people are stupid or something.
Yeah. I remember talking to you about the short you took, man. It played out perfect, and one of the reasons is because you left your invalidation as is, right? You didn't trail your stop, and
we were walking around Dumbo Park, right?
Hey, man, come on, man. Yeah. Can't let people know what we doing out here. No, I'm joking. We got the feds and the cartel in the chat, man. You trying to get me killed, man. They want to take me out, sir.
They do, man. They do. Yeah, we need to be careful, man.
But yeah, I remember that trade. I was thinking about it, and honestly, it was beautiful, man. You shorted the top and you let it play out.
And it was one of those. I remember the kind of discussion, right? Because you were saying, okay, look, how are you going to manage this now, right? And I think I was saying, look, this is one of those where actually I think I'm looking at a swing rotation, right? So I'm at terms with the risk that I'm taking. Right, if I lose that money, I've kind of mentally accepted that I would lose that money, but I'm just going to hold the trade.
Yeah,
I'm going to let it rotate, and I'm going to let it move lower, right, and give it time to actually fit the meaning of what a swing is, right? Which means that there needs to be a decent price move from here, not just this kind of 1 hour whipsaw, right? And so. But like I said, I always find these guys funny. It's literally, someone could have bought the low of the year on Bitcoin over here, right? And price will drop to there, and they'll be like, haha, how's that long working out for you?
Yeah,
Right?
that's.
It's
I'm
just
telling
like,
you, crypto Twitter is like they have.
it's like managing a position, taking profit, taking partials, trading. It's not a thing, right? It's not a thing. You're gonna let a position like you're gonna let price move 100%, and then it dumps, and like everyone just assumes you're in the same position, right?
You know, like I took a long at 16.8K, and I took profit 17.2, man. And I remember, you know, feeling like a goat because you know, it was a good trade, and then I was pretty much bear posting all the way up to like 25K. You know, it's how it goes, man. When I sell, I have to bear post. You know, it's just like, you know, when I don't have exposure to the market, you must shit on the bulls, man. That's just how it is. No, I'm joking, but yeah, that's pretty much how it went, right?
Yeah.
But I think just to get back on your point, it's like so right now you're at a stage in your trading. Should we call it a career, or should we call it like a retardation? Like, what should we call it? Is trading a career, or is it just like some troll thing people do, right?
Trading is life, dude. You know it.
All right, we'll call it life. You're at this period of your trading life in which like you can be patient and wait for swing opportunities, right? So for people coming up, right? Like that are young, right? Let's say 19, 20. Let's just not shit on the 30-year-olds. Let's just say 30 and under, right? People coming up, they want to, you know, take trading seriously. They want to trade intraday. Maybe they're seeing some profit, right? And they want to trade intraday. How would you like tell a student like that, how, like, which way would you tell them to approach the market if they're trying to take a position and every day and trying to learn all types of market conditions? Like, what would you basically tell them to do?
Okay, so first of all, I'd tell them to grow the heck up, right, and start looking at the bigger swing rotation pictures and stuff like that, right? So
Sir, my audience is degens, man. We got to get people to sign up to your coaching academy.
but then you know, it's like this, right? Yeah. So I mean, look, you know, it's day trading is something which is doable, but I don't think it suits everyone, right? Not everyone has the emotional capacity to be able to cope with the roller coaster equity curve you're going to have, even if that curve is growing, right? Even if it's trending in the right direction, but not everyone is able to cope with the fact that you're going to have kind of you know, runs of wins and as well runs of losses when you're intraday trading, right? And so I just don't think it I just don't think it suits everyone. But if you're looking for a strategy, right, and you're saying, hey, Will, when you used to day trade the markets, what was the intraday strategy you were using? I mean, the easiest and most simplest strategy that you can use is to just trade a breakout of the daily open, right? And I would normally be doing that like on a 15-minute time frame. So let me just bring up, let me bring up my level, right? If the indicator chooses to work, I'll do it here. I've already got it. Just give me a second, bro.
Sure, go ahead.
I don't know how visible this is. Sorry, man. If you want to learn patience, you just gotta follow me in computers, man. You'll learn patience very quickly. All right, so well, I mean, if you're trading on an intraday basis, it's a 15-minute time frame. And if you mark the daily open, right? So I take the daily open as 6 a.m. UK local time, and the idea is very simple, right? Which is that every day is going to be up or it's going to be down. So whatever direction the price is breaking in from the open, you just chase it, looking for the price to move a little bit higher or a little bit lower every time you did it, right? And so if we were just kind of taking today, for example, you would have had your long trigger here looking for a follow through, right? Or yesterday you would have had your short trigger here looking for a follow through lower, or the day before you would have had a long trigger. Am I just giving away too much alpha, bro? Is that what's going on?
Bro, I put in the
Right?
chat, man. This is alpha. I'm quiet,
Yeah.
man. You're giving people some trading setups right here. This is
15-minute breakout, bro.
This is like
15-minute breakout.
very simplified
Yeah.
trading
And like,
setups.
There's gonna be wins and there's gonna be losses. I mean, there's a little bit of a follow through there, right? This is a strategy that gets you on the right side of the move. It doesn't tell you where to go out. You got to figure that out, right? But it will get you on the right side of the move. And I mean, trading can be as I'm not gonna say as easy as, right? But certainly when you're looking for a trading strategy, what you want to do is to look for the thing with the least number of moving parts, right? And I think one of the problems that a lot of people have is that when they have their kind of trading strategies, there's just too many moving parts and it gets too complicated, and then usually people are just kind of confused about exactly what it is they're supposed to be doing and how they're going to be managing their risk, right? But if you're doing something like this, right, as long as you can kind of accept, right, that you're going to have winning days and losing days, you're going to have winning trades and losing trades and what have you, it's a strategy that can actually work really, really well, and it doesn't matter how far back you back. Because I think I've gone back now. We've gone back about 2 weeks to find a day where you were going to have probably 3 or 4 losses.
Mm-hmm. Yeah, I see it looks solid.
But otherwise, most days, if the market is kind of pushing on that particular day, it will get you on the right side of the move, and it will keep you on the right side of the move.
I'm gonna automate this strategy tonight, man. Thank you.
I'll send you the indie, bro. Don't worry about it. But you just gotta wake up early.
Yeah, you don't want to send me the indie, man. I'm gonna rip it off and sell it, man. No, I'm joking. But yeah, I see like it's a very simple strategy with rules, and I think like for a new trader that follows something like this, like this is like an easy way, to get intraday. This is like a rule structured setup right here. You just gave people, a great setup. In my opinion, I think this is a very solid setup.
Sure.
If it breaks out, take the trade. If it doesn't, then you can make new rules and take the opposite side of the trade, right?
Exactly. Right. So it's a stop and reverse strategy, but it's very black and white, right? So it doesn't leave you guessing whether your trade has triggered or not.
Yeah, perfect.
Right? And I think that's something that a lot of people struggle with, right? Which is literally, even when they have a strategy, they're just always trying to work out, is my trade in or is my trade not in, or should I execute, should I not? And they're looking for all kinds of market conditions to play out before they can do it. But when you're trading a breakout from a level, once you've decided what that level is and you've decided where that zone is, then it can be incredibly easy. And you need, like, the kind of joke that I make. It's not really a joke, but the advice which I always give to people is I say, look, what you want is to do something where you're operating on 10% brain power, right? Yeah. And people have this idea that they're trading and it needs to be clever, or they're trading and it needs to be intelligent. They're trading, it needs to be high IQ.
Yeah, that's me. That's why I get liquidated.
Right? Exactly, right? Whereas, or that trading is a peak performance sport, right? And the thing which I always kind of have is that if you're operating at peak performance at some point you're going to break down, right? So you have these people who run marathons, right? But they can't run two in the same day. They will just break down, right? It's beyond what their normal capacity is. Well, when you're trading, why would you want to be using a system that requires you to be at peak performance? When it's going good, while you're able to maintain it, you'll make a lot of money, but eventually you'll break down and you will lose everything, right? Whereas if you find something that a retard could do, literally, right? Literally, a moron could do it, right? It's low IQ, right? Then that is something potentially that you could do forever, right? Because and it's something that you'll do forever without it ever breaking down, right? And that's what you're looking for. So like I said, often the issue with trading is that people think that you need to be clever to make money trading, and then they end up finding the thing that looks the most clever, or the thing that looks the most complicated, or the thing that looks really smart, and the result is they end up missing the wood for the they miss the woods because there's a tree in the way, right? And so
yeah, I feel like now you're just taking shots at my order flow.
Oh, for sure, bro. Like I started taking shots an hour ago, right? You just realize.
You're just shitting on all the order flow traders that just came in
This
the
is
picture.
literally what order flow is. It's directional.
Yeah.
Right? You don't need your TWAP and your VWAP and your fancy freaking numbers across the screen. You mark level and you trade a breakout.
It's hilarious,
right?
man. I think like what you're.
This is why I've been here 200 years.
Yeah, I think I'm not gonna lie. Like what you're speaking is 100% facts. Like I'll tell you, like the most money I made trading was like in the bull market when I barely used order flow. It was just like if the market breaks above my diagonal, once it comes down, I'm longing the dip. I don't care about news. I don't care about this. That's when I was making money. But then again, you can say like it was like a degen bull market. Like if what I'm talking about is like if you look on the Twitch screen, the rally from like October 20th all the way to April 21st. That's when I feel like the market was just like extreme easy mode, right? Like all you had to do was literally wake up, press long, and you made money, right? I feel like after April 21st, that's when the market got hard. And even though price is going up now, I feel like the market is in like extreme hard mode. Like just in my opinion, maybe it's just because like I haven't performed as well as like other conditions, but I feel like the market is in hard mode, and like rules that like these daily trades that you talk about is like just an easy way to simplify things, in my opinion. So
if you're day trading, then it literally is day trading is trading the direction of the day, right? And in that same sense, if you were going to be trading on an intra-week basis, you'd be trading the direction of the week, or on an intra-month basis, the direction of the month, and you would let the price float, right? You just let it move in whatever direction up or down from that particular place you need it to, right? But like I said, it's day trading. It's not something that suits everyone, right?
Agreed, 100%.
I'm a boomer, man. I'm from that boomer generation, right? But it's like I tend to find that the younger the trader is, the more easy they find day trading, and as you get older and older, you kind of become a little bit wiser, and you realize that you can make a lot more money with just one good swing.
Right? I agree. I think
yeah,
if I had to say, it would be like trend following and just holding is probably the easiest way to outperform, right? Like
yeah, I mean it is. I mean, it's like I like trading swing reversals, right? And I tend to have a pretty good sense of where the swing reversals are going to happen from, and I talk about it like it's some kind of a sense. It's not really a sense. We're kind of back to harmonics, right? And I know what is the size of a typical extension wave and what is the size of a typical correction wave. And what I tend to do is I'll be looking at a market and I'll be saying, like, but by way of example, right? If we go back to Bitcoin, I'm just going to jump on a big time frame again, right? But here's a question, okay? What is the size of a typical trend extension wave in Bitcoin, right? That's the question. So if I measure up, okay, so I'm kind of going from maybe there to there, and then from and then from there to there, and then from there to there, and I'm measuring everything downwards, right? Regardless of whether it was a bull trend or a bear trend, and then what we can do is we can do a little kind of we can do this kind of little mental calculation we can do this little mental calculation in our heads, right? About what the size would be if it was in a bull trend, or if it was in a bear trend, right? But here are the numbers, okay? What you've got is 47, 55, 50, 44, 43, 41, 37, 44, 45, 38, right? So if Bitcoin is collapsing, right? If there's a bear trend, then the price of Bitcoin is going to fall 40 to 50%, right? That's a fair assessment, in your opinion?
Agreed.
Right, okay. If there's a bull trend, then the market is going to rally 80 to 100%, right? Because we measured everything going downwards, right? So in a bear trend, it corrects 40 to 50%. In a bull trend, it rallies 80 to 100%. Okay, so here's the real alpha, right? The real alpha now is coming. Here's the thing, okay? There is no one system or strategy that works, right? There's no strategy or system that will work all of the time, right? If you're following any system or any strategy, at some point that system or strategy is going to break down, right? And when it breaks down, it's going to give you loss after loss after loss after loss after loss, is number one. Even when that system is not broken, at best, what you're looking at is actually a very minor edge. What you're looking at is the difference between a coin toss, which is 50-50, and the edge is you've got a 51% strike rate, right? Or 51% win rate versus 49% loss rate, right? That's the reality of all trading systems, right? So how is it, knowing that you could actually gain a proper edge, right? Like a proper edge would be one where you'd say, well, like actually I would want a strike rate of 55% or 60 or 65 or 70 or 80 or 90 or 100,000 or whatever, like you'd say, well, how do I actually increase this edge? What you kind of have to realize is that systems give you signals, right? And a system will only ever work in a particular market condition. It won't work in every market condition. And what you have to do is you take your system and you study the market and you learn to recognize the market condition in which the system gives winning signals, right? And then if you can do that, what will happen is when your system is giving you a signal, you're going to look at the market and you're going to say, yeah, I'm getting a signal, but is this the market condition in which I get a winning signal? And if it isn't, you will dismiss it. And if it is, you'll say, hey, I'll take this trade. And then what you might find is that you're applying this strategy, but because you're being selective about the signals based on the market conditions in which the winning trades come, you end up taking the better signals, and you end up passing over more of the bad signals that that system gives, right? So just kind of laying a little bit of groundwork to something that I want to demonstrate to you on the chart now. So I like trading swing reversals, right? That's what I like doing. I know that a trending wave in Bitcoin will be from 80 to 100%. So the closer that price has gotten to 100% move,
Sorry to cut you off, but if you're doing something on the chart, it's not showing.
I'm not doing. I'm just
Okay, okay,
explaining.
okay.
I'll
Sorry.
do it in a
Sorry.
second.
Go ahead.
But the closer that the price has gotten to 100% move, the more likely it is that the swing reversal signal that I'm getting is going to be an accurate signal, right? So now I'm not looking at my strategy in isolation. What I'm doing is I'm taking my strategy and I'm saying, under what market condition will my strategy give me a winning trade? And so, for example, if we're looking at Bitcoin, and just by way of example, I had a signal short, and I had another signal short, I had another signal short. Right. You probably took that one with me, bro. Right.
Which one?
That one. Right? I'm saying, like, the system is giving me signals, right? It says short, short, short. But at some point, it makes sense to take the signal, right? And so, by way of example, if I'm getting a signal, the earliest point for a swing reversal that it's going to make sense to me to take that signal is once the market has moved anywhere between 80 and 100%, right? And isn't it funny then, right, that the price is going and hitting the wall, right? But it's not the fact that the price is hitting the wall that says there's a swing short here. It's the fact of how much the price has moved prior to it actually reaching that wall, right? Does the idea kind of make sense to everyone, right? So, we know that swing reversals happen after the price has moved 80 to 100%. If I'm getting a swing signal before the price has moved 80%, right, then I'll be quite happy to ignore that signal. The closer that price gets to 100% move, the more inclined I will be to take that signal, right? And that is literally the secret, right? That's the secret sauce right there. That is all it is if you understand the market conditions in which your system gives good winning trades, then you will ignore all the other signals and you will only take the ones that come in those market conditions. And so what you have to do then is to start spending a lot more time studying the market environment than you do studying and researching a trading strategy, right? You learn to understand the market environment, and once you've understood that, you're going to be in a much, much better place to be taking better trades, right? And dude, I'll tell you something else, just as free of charge, right? I charge for this. Bitcoin is so harmonic, right, that the step sizes that it moves in, move to move, you could literally forecast it, you could predict it, right? You look at the correction from 25 down to 19.4 or whatever, right? You want me to measure it, right? Check this out, okay? That correction is what, 20%? In fact, I'm going to do this very exact, right? Okay, so that correction is what, just over 20%. Yeah, okay. What size correction do you think that move's going to be?
20.
Right there. Okay, you kind of get a sense, right? Like, if you are looking for a continuation trade in Bitcoin, right, and that the typical correction in Bitcoin, and you can go back on the chart and you can measure these, right? What you're going to find is that a typical correction in Bitcoin is 20 to 30%, right? Now, if you know that and you're getting a long signal and the price hasn't corrected 20%, you're going to struggle, aren't you? You're going to struggle to get a good trade, right? But you know that once there's been a 20% correction, if you're getting a signal for that continuation trade, then at that point, it probably makes sense to take that trade, right? But every signal prior to that, you'd sit there quite happily ignoring it because you're not in the market environment in which your system is going to give you the good signal at that particular point, right? So it's these two things combined that actually deliver trading results. If all you've ever done is to focus on a strategy, then bottom line is, and excuse my French, but you're fucked, right? Because that strategy will blow up in your face. There is literally zero edge in any strategy on its own. I'll write it down for you. I'll sign it, right? I've been around that long. I've lifted every rock. I've looked under it to see what's there. There is no strategy that works in all market environments. There is no strategy that will work independently on its own. What you have to do, and you could do it with the shittiest strategy, is to learn the market environment in which that strategy gives good signals, and all of a sudden, you'll be making money from it, and you'll be getting good signals off of even the worst strategy, right? So, usually with a lot of people, what I've tended to find is that their focus and their attention has always been on the wrong thing. They've never been looking at the market. They've never been trying to understand what the qualities and the characteristics and the harmonics are of the market. They couldn't tell you what a typical wave swing expectation is in any given month. They couldn't tell you what the size of a typical extension is or what the size of a typical correction is. They wouldn't even know what a typical daily range for the instrument is that they're trading, and consequently they end up round tripping every single trade they take, right? So
come on, sir. You got to stop insulting me, man. This is my stream.
Am I going deep? Is this going deep?
No, I'm joking. No, this is perfect, man.
This is Himalayan pink salt, bro.
I'm not gonna lie. I'm gonna listen to this as well. This is like, a podcast. So like the other stream we did, you just play it on in the car and just drive and listen, man. It's just beautiful.
Yeah. But
beautiful
this
analogy,
is it.
man.
It's just the case of, look, if you want to make it, you've got to focus on the right thing, and trading is so much, and like markets, man. Markets are so, smoke and mirrors, right? That's how it's impossible to decipher. But when you start focusing on the right element, you'll find that your game just instantly improves, right? Because you were looking at the right thing, or you were looking in the right place, right? And like I said, that's what I've typically tended to find with a lot of traders that I coach, right? Which is, I kind of get them started, and I say, hey, let's start here. Let's actually, let's look at and study the movements in the actual instrument. And when you know those, you probably won't need someone to teach you a strategy. You'll be able to monetize those movements just for themselves, for what they are, right? And play the game that way.
Beautifully said, man. I feel like myself as well, I needed to hear that. And I had a lot of points to say, but I didn't want to cut you off. But I think what you mentioned about there's no edge in any strategy on its own, and you can vouch for that. I have to agree with you, right? Because so like I said, I think for the most part, I'm like a price action trader. Sometimes or most times I'll try to incorporate order flow into, the way I trade. And I can tell you right now, in a trending market, if you stick to just trying to trade order flow, you're most likely going to get outperformed by someone just buying the dip and holding, and just, because like, I feel like, it took me a while to learn the best time to do order flow, right? And maybe this is like gonna be my sharing my alpha, right? Because look, when I started, like I said, I started trading RSI, right? I used to short on divergences, and it was doing great, right? Like you said, there's no edge. Like there was 75% win rate in the bear market. If you literally just waited on the 5-minute time frame for an RSI divergence, like 9 times out of 10, it was going to be profitable because it was a bear market and there was no momentum at the time. But now I notice, right? There was no momentum, and every time the market would pump, it would just mean revert back. So like if you use RSI divergence, you can see like when it's diverging, and then you keep making money that way. But once the market changes and we get some momentum, you keep you keep trying to trade the RSI divergences, you get wrecked, right? So what I want to say about order flow is there's times when order flow is dominant, and if people don't understand what order flow is, it's just basically like you looking at either footprints, you're looking at the cumulative volume delta, you can look at, there's many other things to look at, but in certain times, if you're looking at this information and the market is doing something else, you will get wrecked, right? Like, for example, like one of my favorite strategies to trade while doing order flow is like on a sharp move down like this, right? Are you looking at the twist chart?
Yeah, I can see your chart.
So on a sharp move down like this, right? When I see on order flow, when I look at order flow, whether it be looking at open interest, if I see open interest increasing here and shorts are increasing here, right? Because they're trying to play the move down, order flow is going to tell me like, look, I don't want to be in the trade with these guys because the market can easily take them out because now they're trying to short into a support level and they're getting aggressive. But now we have spot, right? If you know what spot CVD is basically like, if you look at my screen here, you can see spot CVD. Like this is basically like a free way to look at it. I do look at XO sometimes. You can see like over here, if you look at this delta on Binance and Coinbase, you can see there was a large seller here, but there was no follow through selling, right? So you can see like the market stagnant and really no follow through, so we couldn't break the 30k further, right? So when you see like sellers slow down like this, that tells me, there's not spot sellers, but if you look here, there would be like a lot of shorts opening up right here, right? But what moves the market is spot, right? Because somebody has to move the market by buying spot. And if you paid attention these past couple of days, we found out like a sailor bought another 300 mil, right? So when I was seeing on Coinbase, there was a spot buyer, from around here, like this 26
Do you reckon Sailor was buying on Coinbase?
He buys on Coinbase, yeah, because he's either he buys.
I'm sure he'll be buying direct from miners, man.
I think it's like
on an OTC market, man. It won't be on Coinbase, bro. Honestly.
Look, I'm telling you, he buys some on Coinbase. I can guarantee because
George Soros is on Coinbase, bro. Not Michael Saylor.
Sailor is definitely on Coinbase because there was times where I would see a TWAP running on Coinbase, right? You can literally see the TWAP in the book. Like there's you can see the number going up, and then the next day, Sailor would announce like he bought this amount of this. But I'm sure like he'll buy some on Coinbase, and then he'll like buy some elsewhere, right? But anyways, my point is like when you see CVD on spot going up and you see shorts opening, which is gonna be perpetuals, that's a good time, to take some opportunity on some trades, right?
Pattern in the order flow, right? It's a pattern in the data that you're looking at, and it just kind of indicates to you the next directional move or it lets you anticipate the next directional move because you've seen that same pattern repeat in the order flow. Right?
Absolutely, yes.
Right.
So here's my thing, right? So like where order flow you can really, mess up is if you don't recognize that the market is now trending and you're still trying to counter trade trap traders, but the market is now trending. So these trap traders, they're going to continue getting relief because the market has momentum now. So like that's what I had to learn, I would say, over the past couple of years, that there's certain times where you want to trade order flow. Like for example, in a range like this, now you can try to find little edge, but when the market is trending up only and you're trying to trade order flow in this one day, you can literally get wrecked easily by using the same strategy you would use here, right? Because if we use the same type of same type of logic here, there was longs opening here aggressively on futures, and even the market pumped, right? Usually when I see longs opening like this, I would expect a retrace, but you have to understand the context of which we were consolidating over here And I also noticed this. This is what, this is how experience comes into play. In this 3 day range, there was a lot of shorts opening up. Not to mention here, when we bottomed, I noticed like there was aggressive longs and aggressive shorts over here, and they continue to add here. So if you're trying to counter trade them here, you can understand there's more trap people still here. So that's why the market legged up here. And I think like you just let the range play out, and then you can try to use these order flow techniques, which it kind of helped me. I took like a long yesterday here, and even like what I say, like I mentioned on my Twitter, even like when the market dumped here, right, and I was paying attention to order flow, I saw like in this range here, you can imagine over 800 million, on lower time frame,
Yeah.
800 million on the future, all right, on perpetuals open in 21 hours. So you can think about how many shorts open in this range here, and just to see them, they open as well here. So this was over like 1 billion over here. So like what I did, instead of longing Bitcoin, I longed basically Ethereum down here. Like I was longing Ethereum here on spot, and even myself, I had plans to take profit here, like around 1800. You can see this level, like the breakdown and the retest. But just like micromanaging, I ended up taking profit first here. And it would make sense because it's a resistance level, right? So like my logic here was, look, we just bumped into resistance. We kind of rejected. So I'm going to take profit here. And if the market comes back, I will just add, right? That's what I said. I'll add and then hold on to the position, right? So I ended up taking like 40% of my position out here, and the market gave me a weekend pump. And in my head, I'm like, this is a scam weekend pump. So over here, I was like 80% out of my position. And if I would have just held spot, you can see like I would have outperformed myself trading today, right? For the past couple of days, I would have just outperformed, right?
But do you think that a part of your struggle is that because you switch between intraday trading strategies and swing trading strategies, that kind of muscle memory kicks in, like you've taken a swing position or something with a view that you're actually taking a swing trade, but then your muscle memory kicks in and you start treating it like a intraday trade, and
absolutely,
like,
that's exactly
like you trip over yourself when that happens,
yeah,
right?
100%.
Because this is the same thing which I always found, right? I always said, look, you're either gonna be day trading or you're gonna be swing trading. It's hard to do both, right?
Yeah, 100%. Like,
And then the other kind of thing in a similar kind of way, right, is you can either be trading breakouts or you can be trading mean reversion. You can't be doing both, because
yeah,
if you do both, it's like there's this kind of muscle memory. They're opposing strategies, right? When you're doing breakouts versus swing reverse. So a breakout says we're going to get expansion, right? A mean reversion says we're going to get contraction. And so what I've tended to find, I don't know if it's just always been me, right? But what I've tended to find is that I will adopt one style or one strategy and then just stick with it, because when I've tried to do more than one, I think it happens with everyone, man. You always end up cutting yourself, right? At some point, because everything else that you're looking at, all the other strategies that you've been applying, that those habits kick in, right? And you end up micromanaging. If you're on a 1 minute time frame, you can micromanage it, right?
Yeah.
But if you're on 15-minute, hourly upwards, and you have this $100 target, but then you're finding you're micromanaging it.
That's where where I lose out on a lot of profits is the micromanaging. And even like a trade recently I took, for example, Ethereum, right? So my plan this whole time, right, in this range, and I said it on my stream like the past couple days, many people are longing here because of support. So we would wait until to long here, right? And I'm still kind of waiting. So yesterday when we dumped, I even took longs on Bitcoin, but they were like more intraday scalps. Like when I took this long yesterday here, I took profit right away. I'm out of the market, and it came down, right? So if I explain the trade I took yesterday, it's funny, right? So initially when I took the mean reversion on this play here, I remember I took a scalp from like 30, 80, something like this. I took profit, like was taking profit here, and then after this I got got out the market, and then when it came back here today, I took another trade and I was in from like 3160. And to be honest, micromanaging, I got out the trade here on the first, like right here, 280. And literally I had plans to just take profit here over here, like 30.6. And even Ethereum, right? So like I let the micromanagement mess me up a lot. And it's still to this day, like I let micromanagement because like I'm staring at charts all day. So I think I'm a genius. I can see like Michael Saylor selling in the order book or something like CZ, and then I'll just convince myself right there, like take profit, get the hell out. So even here, right, I bought perps and spot. So on this dump here, I got in after we wicked here. I just bought like in this range over here, spot, and my plan was to ride this spot position potentially at this level here or to these highs right here, right? And just because I felt like, the market can pull back and give me an entry back at my level, I took profit on my perp position here right away because I was already exposed on spot. And then we pumped like when Bitcoin did the same pump and I closed my long, I took profit here because I'm like, okay, look, resistance. I'm happy to take like a, 1%. Like my money was in stable coins. I'll take 1% on my money in 9 hours any day, right? And you can see like it pumped like this, right? So a lot of times I would enter the trade, and I'm pretty sure this happens to a lot of people that try to intraday trade and swing trade and try to do a mean reversion. This is what I kind of talk about, like about over trading, right? I'm pretty sure like that is a struggle a lot of people have, right? Over trading, right? And just looking
Sure.
at their P&L and just taking profit because they have round trip so many times, and it becomes like I don't want to say maybe trauma, right? Like I don't want to say trauma because it's not that serious, but it becomes something in your head. Like you round trip so many times where you just say, okay, I'm gonna take profit, and then the market runs, and then sometimes you don't round trip, and then you sorry, not sorry, made a mistake. So sometimes you round trip when you told yourself I should take profit, and then it just becomes a never-ending cycle of bullshit, right? So like that's where I'm at. Like I'll just take profit because I don't like to round trip no more, right? So like how would you tell one of your students, right, to get over that hurdle, right? Or basically how would you tell me to get over that hurdle, right?
Yeah, one of my students, right? So
Yeah, I'm an unofficial student because
unofficial student,
every
right?
everything you post, I have you on notification, man. So
Yeah, you downloaded my course on torrents, didn't you? Be
I
honest.
found that shit somewhere, and I'm telling you right now, like I told you last time, like I'm not even shitting you. Like after I watched many price action bullshit in the past on YouTube, RSI, all of that, explaining price action. I listened to ICT. I'm pretty sure you're familiar with who ICT is.
I'm not saying anything, bro.
Okay,
Honestly.
so I'm gonna just say it right now. So like in 2019, how I stumbled upon you. I saw you followed me on Twitter. I didn't even know who you were, right? I'm like, who is this guy? WMD, right? You followed me because I guess like I used to trade, post a lot of trades, right? So after you followed me, you know, I'm usually like, I feel like I'm a ghost, so I don't follow people back. You understand, I don't follow people back right away. But then I saw someone mention your name about price action, and it was someone on Twitter that I was like, this guy's a good trader. And he mentioned you, so I googled your name. I saw like, I saw your website and stuff, and then I saw like, some courses. Let's just not say. So I'm like, let's see what this guy got. I saw some free content, and then like I stumbled upon your price action theory. I shit you not. Once I listened to your theory, it was like so simplified to me, like just to read price action. And I had like 1 year experience, like trying to understand. And you just broke it down so simple. So that's why I say, like, I always give you credit, man. Like, you kind of helped me understand price action better. with a lot of things that you don't really talk about on this stream, but a lot of your other, analogies. So just throwing that out there.
That's cool, man.
Had to be a little
So,
simp out there, you know what I'm saying? My boy
that's
Will
it.
Hunting. But
There
yeah,
you go.
go ahead.
All right. So just kind of addressing this issue, right? Like, I have my take is maybe not what you might anticipate, right? So look, the kind of situation, the situation that you're describing is about the regret, right? That you have this trade open, it's gone in money, you close the trade, you watch it run, right? Now, if you close a trade and watch it run, you're gonna regret that, aren't you? Right?
100% all the time.
Yeah, that's one situation, right? Now, you take another trade and you decide to hold it, but instead of running, it round trips.
Yeah.
Okay, so you're gonna regret that as well, aren't you?
Always. Well,
Yeah.
not always, yeah, but
Well, so what it is when you close a trade, there is always going to be regret, because either you will close it and regret that it kept running, or you will close it and regret that it came back. Okay, there's always going to be regret. But what I'm saying is that having one of those regrets is better than having the other, right? And it's that kind of thing of, I'd rather be sitting in my Lambo crying than sitting on a bus with the same tears, right?
yeah.
Okay, one of those regrets is better than the other. There's always going to be regret. You're never going to have this situation where you closed a trade and there was no regret involved. There's always regret involved, right? And so you just kind of have to accept that having one of those regrets is better than the other. But I want to show you something on the chart as well now, right?
Sure.
And this is something that I discussed.
So before you show me, what regret should I have? Like, should I regret that I took profit, or should I regret that I didn't get liquidated? Man, you gotta let me know. That's why I have you here, bro. You gotta give me the answers, bro. You can't let me figure it out myself. Like,
bro, you know that sensation of getting liquidated, man. Nothing beats that, right? Those emails, right? You gotta collect them, right? These are gonna be kind of future collector's editions emails, right?
Yeah.
And if you screenshot them, you can mint them and sell them as NFTs. Make your money back, man. That's what I'm saying.
Yeah.
Right?
So it's basically you rather. So if I kind of understand, you rather regret that you didn't wait. Hold on. So you rather not get liquidated. All right. That's what I got out of it. So if you take profit,
I'd rather take the money and then regret that the price kept on running than not take the money and watch it come back to zero.
Yeah, there we go. Okay,
right?
so
if there is no bank, which is bad bank, right? You bank it, you take the money, and this is why there are traders in the past who say things like, you take the money when you can, not when you want, because when you want to take it, you won't be able to. Right? Or it will never go to where you want, where you need it to be. You take it when you can, and once you've taken the money, it's just a trade, right? You get closure, you move on, and you go looking for the next opportunity. But if your head is still stuck in the last trade, then you're never gonna, with a clear conscience and like with objective decision making, get into the next position. And when your decision making is not objective, that is when you really mess up, right?
Exactly.
Because,
yep. I feel like that's.
Yeah, it's like every trade is connected with.
So for the people, right? Sorry to cut you off again, but I have to try to get these terms into the degens in the chat, because a lot of people don't understand. So when you say when your decisions are not objective, can you elaborate on that for the degens like myself in the chat?
Yeah, I mean, so straightforward. It's like, look, if you've taken a trade and you lost money on it, and then you're jumping into the next trade, right? That so you kind of get revenge trading, right? And you'd say, okay, well, when you're revenge trading, are those trades objective? Like, were you actually following the signal, or were you finding a trade because you needed a trade to be there, right? Or someone who believes that the market owes them money, right? Regardless of what situation they're in, right? If the market's owing you money, when you open a chart and you're getting a signal within 15 minutes of you having sat at the chart, are you really getting a signal, or have you projected something onto the market that wasn't there because you went looking for it, right? And so, like the grandmothers used to say, man, you go looking for trouble, trouble finds you, right?
Yeah, good.
And trading is like that, right? So how much you always kind of have to maintain an element of objectivity when you apply new systems, right? If your next trade is in any way materially, emotionally connected to the outcome of your last trade, then you're on a slippery slope, right? You always have to be able to take a fresh look, regardless of what happened an hour before, a day before, a week before, and say, right, where do we stand? And so you have to develop this objective decision making, which is not carrying the burden or the weight of all of those liquidation emails you received only this morning, right? I've hacked your email account, bro. I know they're there. So, right? So that's objectivity.
No liquidation this morning, man. No liquidation.
Right? But it's like, that's what I mean by objectivity, right? It's like, but if your decision making, if the application of your system is being affected at any level, like I said, whether it's materially, emotionally, by the last trade and the outcome of the last trade, regardless of whether that trade was a winner or a loser, because people talk about revenge trading, right? That they had a loss and then they jump into another trade trying to recover. I don't know what you call it when you're jumping into a trade right after a winner, right? But I see as many people doing that. You have a winning trade, you smashed it, you hit the ball out the freaking park, right? And you've closed it, and now you need the next high, you need the next fix, right? And people straight away dive in looking for the next trade, right? You kind of see what I mean? So you always have to be a little bit careful that you have that detachment and that these two things are not getting
agreed.
connected to each other,
I think
right?
just to add on to your point, it's like if you take a loss that is much bigger than your average loss, sometimes this non-objective trading can affect you. Like, it has happened to me, in the past, and it kind of, I don't know, till this day it will happen sometimes, but I'm more kind of disciplined these days than I was before. But it's like sometimes you bet big, right? And you don't understand that you're not objectively trading anymore. Now you're just, trading your P&L, and also just you went into effort mode. And this is, I feel like this effort mode can happen to anybody. Doesn't matter if you was trading 10 to 15 years. Like, if sometimes you just say fuck it, right? Like, you just say fuck, the market is wrong and I'm going all out. And then you put yourself at risk, to taking a big loss. And once you take that big loss, now you're like all, you can be all effed up in the head, right? And like, now the way you read the market, you can't even read the market no more, because now you're not looking at it objectively. You're still thinking about the loss, and you don't understand like what's going on, right? So I feel like that should be a rule to everybody's trading. Like, when you start the trading day, are you trading objectively, or are you just being a degen and just trading subjectively? And somebody in the chat said it's time to touch grass, and I think like that's one of the most important things, like, for a trader. Is like, if you take a big loss and you're still trapped in your room, whether it be a basement, most of crypto, they live with their parents in the basement, in the dark, in the corner, and the Wi-Fi router's right next to them, and they have like 6 cans of Coca-Cola on their desk because they're depressed, right? No, I'm joking, but I'm really not though.
No, so cherry Coke, 0 sugar.
Yeah, go take a walk. I learned that taking a walk, breathing some fresh air, getting some sunlight, that could definitely help your mood. Because like, at the end of the day, I think trading is a lot about emotions, and what people don't understand is like the science in the body. It's like, sometimes you can have a chemical imbalance and you won't even know that you're trading irrationally because you have the imbalance. Like, sometimes people will be depressed, they don't even know that they're depressed, right? So like
Exactly.
sunlight helps, vitamin D, you know, drinking water, stuff like that, right? So I think like from my experience, if I take a larger loss than I would expect right away, like now I don't trade, get back into the market right away, even though I feel like I have an edge. I just go outside, go see family or something, get fresh air, and then come back when I have like a fresh state again, and I'm not trying to recoup my loss.
Sure.
Like one of my biggest mistakes was letting the FTX thing affect my
Mm.
trading, and I remember I mentioned it to you, but it's like that kind of you know that kind of experience affected my trading, right? Losing 40% of your net worth, not even
Yeah,
in a trade, right? So like
exactly.
so
That's the
like I
stuff.
let that affect me so much. I'm pretty sure like many people can relate. Like after getting wrecked on FTX, if you lost a large percentage, most of them missed this dip because they couldn't like
Mm.
some people lost up to 8 figures, 7 figures, right? So they couldn't really understand like what the hell was going on. So you know going outside I think is really important.
Sure.
Just to sum on that.
No, man. You know what? Like, it's a situation, isn't it? Right? And I think like you mentioned too many important points there, right? But the key thing is, it's if you're gonna come back from that, you got to be able to draw a line, right? And you can't have your history and whatever's gone before. And like people always kind of feel, look, I need to make this back straight away. And you've always got to say, well, the last time when I accumulated this net worth, it didn't happen over a week. It may have gone down over a week at FTX, right? But
Yeah,
actually, it took me a year to
yeah,
accumulate, right?
for
It
real.
took me
Yep.
2 years to accumulate, and yeah, it's gone down in a week. But if I'm going to make it back, it's going to come back in a year. It's going to come back, and it's going to take me the same time to accumulate, right? It's not going to come back in the same time in which it went down, right? And as long as I think, I don't think it's ever going to be easy, but you have to kind of plan what your expectations should be. You have to plan what's realistic rather than leaving those things unsaid, right? Where there's no consideration to how long something should take. And this is quite often where I think people start finding it really difficult. But one of the things which I found really useful, I don't know if you've kind of seen earlier this year, Stanley Druckenmiller, there was a podcast that he was on, right? I don't know, was it Sawn or Oam or something like this? Have you seen it?
I haven't, to be honest. Like,
Right, so I'll send you a link, right? I'll find it. I'll send you a link,
is
right?
he
But
like a
look,
trader or something?
like Stanley Druckenmiller was a fund manager, and the guy was like an understudy to George Soros at the Quantum Fund,
Mm-hmm.
right? And so the guy is a dude, right? He's like a proper, right? And one of those kind of, and very famous in the kind of fund and money management and fund management world and stuff like this, right? Like I said, understudy to George Soros. This guy lost $1 billion, right, in the first kind of quarter of the year. He tells this story, right, where like he lost $1 billion. He was like down 20% on his fund, and he's like, right, f this, right? Closes his charts, goes to Morocco for 6 months, right? And no newspapers, no looking at markets, not studying anything, no reading material apart from maybe a novel or something like this. Just watches telly, goes for walks in the desert, becomes a freaking hermit for 6 months or something, right? Has a proper nomadic lifestyle. And then he's like, okay, like, let me refresh and go back, right? And doing that enabled him to kind of draw a line, right? And this is like what you're saying, right? Go out, take a walk, right? Get some fresh air, take a break, step back, step away. But you've got to do it to a point where you're able to draw a line, right? So when you do come back, you're being objective, right? And you're saying, right, let's start over and let's start accumulating and kind of growing this thing again. And a lot of it, I think, these are just like little tricks, aren't they? It's ways that you fool yourself to have a different type of behavior, right? But you have to allow yourself to be able to do it. But there's no escaping how hard that can be on someone, right? Because everyone at some point in their life goes through these kinds of ups and downs and tumbles and what have you, and that's never going to be an easy ride. It's just a matter of finding ways of coping so that you can move forward, right? Whereas people who don't find a way to move forward, there's this story over here of this guy who's got like $100 million worth of Bitcoin on a hard drive that went into a rubbish tip somewhere, and the guy's still digging the rubbish tip looking for it, right? Like, the guy needs to move forward, right? Or someone who thinks they had the lottery numbers, right? And for the last 10 years, right, they're trying to find that ticket that they put somewhere where they might have won the lottery, and they think they're entitled to those winnings, and they lose 10 years of their life because they weren't able to draw a line at some point and move forward. And I think that's where kind of exceptional care needs to be taken.
Yeah, makes sense.
But what I tell everyone who had money at FTX, right? Like, someone came to me and said, I had 100K at FTX and it's gone. I told him straight, I said, bro, you're in 90% drawdown. They only took the last 10K, right? Fuck off. They did not take your 100 grand, right?
Oh,
they
man, that's
took
a good
the last 10%, right?
Yeah.
Because, I mean, it was, you look, man, Bitcoin had fallen from 70 freaking K, 69K, right? And it was like tipping like 16K, 15K, right? And people, there's like a 1.5 year bear market, and people are coming out and going, FTX took my money? Really? Come on.
Yeah.
I don't believe it, man.
No, I kid you not, man. I think that, like, it had like a huge psychology effect to a lot of people. So, like, because losing money that, it's kind of your fault, but it's kind of not your fault. It is your fault for having not your coins, not your keys, right? You heard of that term?
Yeah.
So when you have money on exchange, like,
that was just like downright fool.
yeah,
like, what that guy did, he should get hung for it.
like, I kid you not, like, I think I mentioned this to you before. Like, before FTX, I had 8 green months, like 8 green months in a row. Right after FTX, I probably had 4 red months, and it was the first time.
I saw you riding the entire bear wave, bro. Like,
like,
yeah.
That's when you see, like, that's a good example. Like, I was being subjective. I was being very subjective, because I remember, like, this time people think I was short all the way up for some reason. Like, I was not short all the way up. I was net short by being in stable coins, so I had no exposure, right? So I guess if you say that, then yes, I was net short. I think I did lose money trying to scalp and trade order flow, like I said, and even this, it kind of helped me learn, like, even more about my system. And here's the thing, I will explain this, because like, for example, if you pay attention from, like, this top here all the way to, like, I would say May, right? Whatever, right? There was a lot of players in the market. We still had FTX, and we still had many people that can influence the market at any given time, right? There was Three Arrows Capital. There was a bunch of other market makers that all got rinsed during FTX. So I did not take that into consideration, and I tried to trade the same way I was trading during the winning 8 months, right? So, like, let's see, 8 months. I don't know how many days, but I was still trying. So I took a break. Like I said, by the time I was done with my break, I punted along, and I took profit at the bottom. And then from there, it's like the market ripped higher. And I was trying to trade the same way when the market had more players. So what people don't understand is, like, even now, right? So when FTX was in the building, when we had Alameda, when we had Three Arrows Capital, the market would do much more different things. Like, in my opinion, it was a little bit more efficient, like, from my perspective. Like, if we have an imbalance, one of them is going to run that imbalance, right? We had like 7 different big players that could, move the market and run an imbalance down here and then run it back, right? So now it's like we don't have like the same the same type of environment.
Yeah.
So I had to add that into the way I trade. I'm like, if I know that there's an imbalance, I'm not gonna, try to trade towards that imbalance every day. I'm just gonna let it, whenever it comes, it comes. Like, for example, like one of the times I seen it was like, I kind of forget, we kind of ripped, and then was it like, I forgot when, but we ripped, and then when somebody said jump capital sold, we kind of like dumped quickly. I forget exactly when it happened, but we had like a downside wick that kind of reminded me of like the old market where the market just scammed a lot of people. I think it was here, right? Like in this. So like at this time right here, I think the FOMC, something happened where some coins got moved on chain, and then we just kind of ripped down like so quickly.
Yeah.
So a lot of these times in like when we had all these players, right? We used to get a lot of this, and this is where I kind of take advantage. But you can see here, like, we're up only, and we had no real whip to the downside yet. So now I just trade like price for what it is. Like when I took the trades, I approached it objectively. I said, look, we're at support. Like when I took a long, we're at support. If the market breaks down, easy invalidation. And I'm not expecting for the market to nuke like it was before. So before, how I was trading, I was always expecting these moves because I watch price every day. They were very frequent where the market's gonna fill an imbalance. Like you can see from here, there's like an imbalance, and I think eventually it fills this imbalance. But now I'm not spending every day waiting for it to fill. I'm just trying to, do my best to get points here and there. So I think saying all of that is just basically, to summarize it, is like, don't get liquidated, bro. No, I'm joking. but yeah, that's my point, right? So yeah, like I think adapting is probably one of the most important things for a trader to have, is just being able to adapt to different conditions. And it's one of the reasons why what you mentioned earlier in saying like there's no one strategy that's going to give you edge, right? Because the market is always adapting, and if you can't adapt quicker or try to at least get on the same page, then you're just going to get blown out, right?
Yeah, no, for sure. Jump back to my screen. I just want to show you, this actual initial question you were asking about take profit. I'll
on your screen, okay, sure. So we're on your screen,
right? So look, you're asking this thing about taking profit, right? And we were talking about, if you close a trade, you're going to regret it. If you hold a trade, you're going to regret it. There's always going to be regret, right? So I'm on Bitcoin on the daily chart, right? And the first thing which I want to kind of tell you is, if you look at that chart, what you realize is that you have a whole bunch of very normal size days, right? And then you have these outlier days, right? You can kind of see that. Yeah. Okay, so you got your normal days, and then you got your outlier days, right? So a whole bunch of normal days, whole bunch of normal days, whole bunch of normal days, right? And what I'll tell you this, just to save us from actually doing it, is that a typical high to low range in Bitcoin on any given days is anywhere between 3 and 5%, right? That is what your typical range will be in Bitcoin from high to low on most typical days.
This is your back tested alpha right here, 5%.
3 to 5.
Okay.
Right? And you know what? I don't even care
agree.
about the number, right? It's more important that you have a number than it is that the number should be accurate, right? So if I say 3 to 5 and someone says 5 to 7, I don't really care, right? What's important is that you have an idea of what your typical normal day movement is on any given day, what the reasonable expectation would be. Yeah. Okay. So here's the actual kind of question, right? And we were kind of, talking earlier about studying the market, understanding the market, right? Which is, if you had to break down the ratio looking at this chart, okay, and tell me what ratio is there of normal days or typical days versus the outlier days, right? And I would say, look, these are all kind of typical days, right? These are all typical days, typical days, typical days, typical days. I would say if you're a pessimist, you would say there's 13 normal days for every 2 outlier days. So it's like, it's like 13 days out of 15. You get 2 days out of 15 will be these huge moves, right? And 13 days out of 15 is just going to be a typical normal range. And if you were being an optimist, you'd probably say 9 out of 10, right? So, it's like 1 day out of 10 is going to be this outlier move, okay? And I mean, what you kind of have to do is to appreciate what information that is giving you, right? Because let's say you took a trade on any given day, and that trade somehow, miraculously, because God is answering your prayers, has somehow gone into money, right? What happens is that most traders, the moment they see a trade go into money, there's this change that takes place where all of a sudden it's, hey, this is the one, bro. This is the one which is going to give 1,000x return. All those $1,000 trades that we lost, this one trade's going to make it all back. It's going to go 100x. It's going to go 500x, right? Just by the mere fact that it went into profit in the first place, all of a sudden, people will start thinking that, right? This is how traders think, okay? And the question that I'm kind of asking is, just on a probability basis, looking at how many normal days there are versus outlier days, what the hell makes you think that you're that freaking lucky that you've taken a trade and it's an outlier day? What are the actual chances, right? And you realize the chance is 1 in 10. And so what I'm telling you is, if you've taken a trade on any given day, if you assume that you are just looking at a normal daily range that day, you will bank every single day. Whereas if you assumed that you're in the outlier day, you will only bank on 1 day and you will lose money on 9, right? So when you're trading on an intraday basis, the best assumption that you can make is that actually it's just going to be another normal day. It's going to be a typical day. And you take the money, and if it happened to be, and it turns out to be an outlier day, so freaking what, right? But if you're assuming that it's going to be an outlier day, you're going to be wrong 9 times out of 10, right? And so we're kind of back to that thing that if you study the market first, then you will adapt your expectations based on the study that you did, rather than expecting that the market is going to change to meet your expectations, right? And so it's just that case, you got to look at the market, you see what that typical daily range is, you can see the ratio, and you know, right? If you were that lucky, you would have gotten lucky years ago, right? We're not lucky, right? What you have to do, the way that you manage the position, the way that you take the money, the way that you bank has to be based on this data, has to be based on this information. And if it's not, then you're just kind of left to the mercy of the market, right? Because there's no expectation of how far the price might move, how the market is expected to behave, and all of those factors, right? And this is literally it. It's just, we would need to fix that discombobulation, right? You look at the market, you do the study, and once you've done it, right? You'll take a position and you'll bank, and you'll be happy with it, because chances are, if you didn't bank, you are going to round trip. and that's going to happen 9 days out of 10, right? So
Yeah,
there you go.
makes sense. Makes sense. Great points. And just to add on to it, just to summarize, this type of analogy can be brought into intraday as well, right? With the movements of the market, right?
Yeah.
So basically, well, just to summarize, like if you have a ratio of a 3 to 5% move intraday, right?
Mhm.
And the 3 to 5% moves happens, then you should
Take
at
the
least
money.
be looking to take the money, basically.
Take the money,
Be-
especially if you're trading intraday, right? It's like,
yeah,
what makes you think you're going to catch an outlier day?
yeah,
What's the chances?
yeah,
1 out
for
of
sure.
10,
Yeah,
right? You know how lucky you have to be catching that
you have
day.
to be very lucky. I'm
You
not
have
gonna
to be
lie.
very lucky.
I think it was only
That's
like
the first, right?
one
It's like,
time,
yeah, but
a
what
few times. I had a few times where I had those days where I feel like it's either going to be one day of the month or 2 days in the month where the market is going to move very aggressively. And
sure.
like if you pay attention throughout this whole time, right? If we look, this is going to be 39 days.
Yeah.
I would say in 39 days, this is the outlier move that we're talking about here. So
Yeah.
in these 40 days,
Mhm.
are you
Well,
really expecting, if you're trying to expect this move on every time, you would likely,
exactly.
not
That's it.
not make it, right?
Yeah. No,
But
yeah, I think you've graphicked that perfectly on your chart, right?
yeah,
Because that's literally what we're showing, right? It's just
Mhm.
a case of, it's like you got 1 or 2 or 3 days in a month where you get these massive outlier days. If you were going to be that lucky, you wouldn't even be here watching this webinar, right?
yeah, for real. I
Yeah,
wouldn't even be on Twitter
yeah,
if I
right?
could catch
Exactly.
these.
You'd be sailing on your yacht around the
Yeah,
Caribbean,
pretty much.
snorting cocaine off a hooker's ass, right?
Yeah,
That's what you'd be doing. So, if we were gonna, and the point actually is just that when you make money, there's 2 ways to make money, right? You can make money getting lucky, or you can try and do it deliberately,
Mhm.
right? And the problem with being lucky is when you're lucky, you make money, and when you're unlucky, you lose it.
Mhm.
Right? And so, the edge is actually that you got to learn to do what you're doing deliberately. There's a framework, there's a process, there's there's a routine that you're following. There's an actual approach, a methodology that if you follow it, it allows you to be able to regularly bank and to make money from the markets, right? And it's the only way that it can be done deliberately.
Yeah,
Right?
and that comes. I think all of that, it really comes with experience. Like
Yeah.
I know like we're telling people about this, but there's no way, in my opinion, for someone to be, to have all of these qualities without, testing it in real time, right? Because there's many times where I listen to, people as I was trading, and the information they give is beautiful, but as a human, and I feel like a lot of people, sometimes people don't listen until it really happens to them, right? When people say use risk management, right? Try to not lose your whole bankroll in one trade and stuff like that. So a lot of people have to go through losing their whole bankroll. Like I feel like a lot of traders have to experience that to really understand like what these people are talking about, basically.
Oh, for sure. I mean, the experience plays a huge part.
Yeah.
Plays a huge part. I mean, but it's about doing it, right? So it's like as you take these concepts, you start applying it in the way that you're trading, and I think what will happen is people will actually start feeling that there's a change, right? And that it's kind of altering the results that they were experiencing. But if people keep doing it the same way that they were, then what changed?
Yeah,
right?
for sure.
It's like if you're doing it the same way, if they're doing it the same way they were doing it before, then the results actually going to
end up being the same. Yeah,
it's going to end up
for sure.
remaining the same.
100%, I agree. It's
And-
like
and-
there's like a term like if you keep doing something crazy, I forget exactly the quoted term, but it's like if you keep doing the same thing, like the same results will happen if you don't change the way
Yeah.
you trade, or the same
Exactly.
like some people think they never can be wrong in the market, and it doesn't really matter if you're on a 10-month win streak, a 100-month win streak. There's going to be one time where you're wrong, and if you don't, if you don't have certain parameters that can mitigate your risk, you're going to get wrecked. Doesn't really matter happens to the best traders.
Exactly.
Like if it happened to Jesse Livermore, it could happen to anyone, right? Do you?
Oh, for sure, man.
Yeah.
I mean,
So
like, dude, we've all been through it, man.
100%.
Everyone's been through that ringer, man. Everyone's been through that ringer, and it's
So-
like you go through drawdown, and then it's like a much slower recovery, right? But you recover, you get back to break even, and then you got to kind of inch forward to get some growth in the equity curve or whatever. But
Yeah.
and like the thing which I always say to people is that it's better that you experience it early in your career,
For sure.
not to know that it can happen.
Mhm.
Because if you don't experience it early on, you could actually have this very successful trading career, and then it happens at the last minute, right? When you're coming to the kind of end of your career, and then and then you find out, oh, right, I could lose everything. And so if you appreciated that at the beginning, your risk management actually starts becoming a lot better. I mean, it was like 2008, I lost everything. Right? So it's like 2.5 years gains on my trading account, lost in 2.5 days.
Traumatized. The comeback is even stronger though.
Well, I'm still scarred, man. I'm still scarred. I just don't.
Yeah. Yep.
I'm still scarred. I can't
Still
even
scarred.
look at gold.
Listen, chat. 17 years in the game, he's still scarred from 2008. And
Oh, for sure.
and
man.
I agree. Like even when I was coming up, I was before I started trading, I started with a small 4-figure account. I was working in my day job, and it got to a point where I was making profits more than my day job, and then I thought I was the best trader in the world, and then something happened where I just gave back all those profits, and it just put me back into reality. Like, yo, you really don't know shit, bro. Like, you have much to learn. So after that happened, I feel like then you go to another stage where you come back with a better approach to the market. Then you get wrecked again. So you have to repeat that process until you stop getting wrecked, basically. So it's like a never-ending process until you fix something. Like, you have to fix something.
Well, every time you have to kind of think, okay, what am I doing different this time, right? And
Yeah.
if you're not doing anything differently,
Then,
it's going to repeat. You're going to fall over again.
Yeah,
and,
basically.
and that's what you're kind of trying to avoid. But you do see a lot of that kind of degen gambling thing in crypto, where people are literally, all right, let's load up another account and just, I don't know, put everything on red.
Yeah.
Right. And spin the roulette wheel, and let's see how the numbers land. And I think, I mean, the thing you kind of have to be really, really careful of, especially on CT, right, is confirmation bias, right? Where, look, people only see the guy who won the lottery, right? They don't see how many people played.
Yeah.
Right. And that's what makes the lottery look like, or that's what the appeal of playing the lottery is for a lot of people, right? And that's literally confirmation bias, because they're just looking at the guy who won, not at how many people played. And it's a similar thing on CT, right? That you can, if you look and you say, and you really try to kind of work through and you say, right, who are the guys who have made any real kind of amount of money, right? And I think there's, but you can kind of count on one hand or two hands or a couple of hands or whatever, and you kind of have a sense, right, that these guys really made good money, right? But then you look at the size of CT itself, right, and you realize, don't you, right, that actually most people are literally just chancing it on the next spin of the wheel.
Yep.
Right.
Agreed.
They're chancing it on the next roll of the dice, and they'll be there forever. There are a lot of people who have lost every penny that someone has made. Someone lost it, right? That's what you have to kind of consider, man. It's like, whose big house and fancy car are you paying for, right?
Yeah, agreed.
But it's usually CZ, not gonna lie, right? Like every
SC,
time
you mean? Trader SC.
Yeah, maybe SC, right?
He's in here listening, by the way.
Yeah. Is it cool? Yeah,
Nah, I'm joking. I don't know if he's in here, but that's our guy.
Yeah. But like every time I used to load money on Binance, CZ used to post a picture of a new watch, right? And it took me a while to put two and two together, man. I was like, no.
Yeah.
It can't be like that. But like I said, you just need to be careful, right? Because it's you know, if you actually look and you say who are the people who are making it, you'll kind of realize it's a small number, and actually it's just a lot of people because they're not doing anything different, right? They're still in that degen gambling mode, or they're in
Yeah.
trial and error mode, which is kind of really worse because they're losing time
Yeah, the trial and error mode is, I think, that is, if I think about it, that's like the hardest part, the trial and error mode, because it can go on for a long time, right? You can
for
be
sure.
trial and error for like 4 years. You can be trial and error for 1 year, but it really depends on your work ethic, in my opinion. And I think like that's why I go back to journaling. I remember in the last stream you shitted on journaling, but I really think like uh, journaling each and every single trade you take, or having a software, I think that's the first step into like actually realizing your mistakes. Like if I can say something, so like this year, I looked at my journal and I saw something that showed me like my biggest losing days were on the weekends. So
Yeah.
I noticed this, I would say like in the middle of May. So what I did was I stopped being aggressive on the weekend, and
Yeah.
that little adjustment helped, adjust my profit, right? Like it helped me keep more profits. And then another thing is like I've been talking about it like on stream for the past couple of months. So like in June and May, like I had a good month in the beginning of May, towards the middle of the month, like up to May 20th, I had a good month. I reached, targets I would like. So I tell people like the last 10 months, the way I'm approaching it is I'm going to be less aggressive. I'm going to be passive and more patient because I already had a good month. Why would I want to risk it and give back my profits? Because I noticed this in the other months. I could start off good and then I'll finish the month in the red because I just was taking on too many trades, taking on too much risk, when all I had to do was just relax on the profits, right? So these little adjustments, I think, when you notice these little things, it could really help, your trading. And it all comes down to like, yes, trial and error, but really understanding like yourself as a trader, if that makes sense.
Yeah, no, I get that, man. Like, if it works for you, it works for you. Like, my main thing with journaling isn't, it's not actually about journaling, right? It's like what people journal, right? So, like,
Yeah, exactly.
I've seen people's journals where they're kind of writing the weather conditions,
Yeah, for
right?
sure.
And what they had for lunch that day and what they had for
Yeah,
breakfast.
that I don't think that is
It's just
necessary.
like, I'm like, man, what's the relationship
To
between
me,
that?
that's bullshit. I think the only important thing in something in that nature is like, did you sleep enough? Because one thing I notice is like, if you don't sleep enough, whether you believe it or not, you're irrational. Doesn't nobody's superhuman. We all need rest. So if you don't get the right rest, you can make irrational decisions without realizing. So like I
Right.
think sleep is important. It's
If you're
probably
getting more than 15 minutes of sleep per session, you're an amateur.
yeah,
Say
man.
amateur,
So
right? You want to come up to pro level, right? We sleep about 5 minutes per session.
funny. So this part of like what I want to do is something fun and different. So like basically these people in here want entry and TP and whatnot. So I guess like I'll draw my intraday chart, and if you want to add anything, if you were an intraday trader, how you would look at it, feel free to add. But basically, we'll start on Bitcoin. I have this chart up, a simple chart. I have this. You call it trend wall, trend line, trend wall, line, whatever. So this line here, right? This I'm just using this on this chart to like give me bias direction, right? So above, I believe like overall, it has a chance to go to mid 30s, or even the high of this channel, right? Like something like this, right? Below, then we would look to play downside, like this liquidity, this untested equal low right here, right? So I will start I will zoom in for intraday opportunities, right? And I'll explain what I see today in the market. So as I was observing this price action yesterday, I mentioned like I took a long after I took this long here and took profit like at 400s. I took another long and I ended up puking that position because once again doing too much micromanagement. But from what I understand, the reason I entered this long is because once again I see shorts getting aggressive at the lows, right? And it would make sense because they're trying to play a breakdown trade and target like something like this, right? And get this imbalance. So they're shorting here. So what I understand from this price is like we have people that are trapped in shorts here, and we could say the midpoint of their entry is 30.136, right? And then we have again people are trapped here intraday because this here was probably an opportunity for them to add onto their position. So we can say they're also trapped here and the market is holding above this level, right? So when I see these two things, right? And right now I'm not really using the trend line because this is more like order flow trading, like we mentioned. Like this is how I look at this order flow trading, right? So I can see trap traders here, trader. I don't even know how to talk anymore. Trap traders in both sides, right? So right now the play I have is I put like a little mark here, observe, because one, we pumped off of this level, and to me this is right away demand. So you can see one touch, we pumped again, held, and then when I looked at order flow myself, look, we're just gonna give it how it is, right? So you can see the spot buyer is coming to life at this level here, right? So if the market is gonna come below this level, and we assume that these shorts have no way to get out the market because look, they're still holding short right now, right? Believe it or not, I can see like they're still holding short and they're trapped. So the person here, he's trying to get them out of here, right? He's trying to squeeze them. So the only way he can squeeze them is to take the market higher than this level. So my plays intraday would be like, if the market is gonna take liquidity here, I'm gonna look for opportunity to long, and it could be a couple of points, play a pullback, because I know there's people that want to get out these trap positions. They've been underwater now for about 14 hours, 15 hours, and now they're scared if the market can go up here. So I would wait to see if they're going to take this liquidity, and then I'll take an intraday scalp. Like I know that would be a scalp and not a swing, so I'll be looking to take profit quickly. Furthermore is if they come back into this level, I would also look to take a scalp back to the upside, right? So these are my intraday plays right now, is looking opportunities to take a scalp at this level, whether it be 100 points, 200 points. Depending on your side, you can take quick scalps, right? And then if they run liquidity above here, then I would look to fade a move here that's going to stop these guys out. So that's my intraday plays. What do you think of this type of trading, right? Because you're more of a swing trader. So
like I mean, I understand what you're doing. I mean, it's just, look, it's an intraday thing, isn't it? You're just looking at where the nearest support is, and you're saying, well, as long as that support's holding, it's a technical long at the lows, right? And I would say, okay, makes sense, but from your strategic point of view, I wouldn't be trying to hit anything right now. If I was going to hit something based on the daily strategy that I showed you earlier on, I mean, that will kick in. That zone is between, it's the 6 a.m. candle, right? You mark the high to low of the 6 a.m. candle, UK local time, because the universe obviously revolves around the UK. And then any breakout from that zone would be my kind of go-to strategy on an intraday basis.
Like right? 250s, right? This zone here,
right? No, I'm talking about I'm talking about. I mean, look, today's finished, right, for me.
Yeah, today's done.
Yeah, so tomorrow, whatever the range forms at 6 a.m. UK local time, you mark that zone, and then you get a 15-minute breakout candle, and you chase it, right? And if the price flips that zone, you change your mind and you chase it in the opposite direction. Right?
Yeah, simplicity.
And that's literally like I said. On the based on how the market is right now, I've got that low marked as support, which is like I think I showed you right at the beginning, right? But it's like literally I've got that kind of 29.6 marked as support.
Mm-hmm.
As long as the price is remaining above 29.6, I'm sitting out with an expectation that it's going to push higher.
Yeah.
It breaks down 29.6 back test. I would expect for it to break down further, right? And if she's gonna pump, I'm quite happy to watch her pump. It's like I said, I'll do business when she reaches a place where I want to do business. I can't really force my hand, right?
Yeah. See, that's what I do. I force my hand.
Right? So,
but I think
yeah.
so the way I'm looking at this is just basic small risk intraday opportunities just to get exposure to the market, right? Risk defined objective setups.
Yeah.
In my opinion.
Look, right now you can see prices making support at 29.6, 29.7, that kind of mark, right? And so, if you're kind of saying, well, that's your nearest SR, right? Then as long as the price is above that level, you're in technical long territory.
Yeah.
Right. And so, you can keep buying micro dips, but if that level gives way, then you got to get out quick.
Yep.
Right.
Agreed.
Because that would be what would be indicating potential shift in direction.
Yeah. So like these opportunities would just be reactional. So like
Yeah,
I'm reacting at these levels.
Yeah, but I know, man. Like, see, the thing is, your personality type is you handle the intraday fat moves really quick, and you get in and you get out, right?
Yeah.
The kind of thing where you kind of have to be careful is because I've seen other people try to do it, and what ends up happening is they don't have the detachment from the trade that you have.
Yeah.
Right. So they've taken the trade, it goes out of money, they're just left holding it, and now it's become their swing setup.
Yeah,
right?
for sure.
And then if it goes more out of money, it's become their long-term investment.
Yep. That's how it is.
Whereas you cut the trade when it's offside, right? So I think this is where, again, that's the kind of challenge of intraday trading and whether it suits everyone, right? Because when you're intraday trading, you have to be prepared to cut things really quickly, right?
Agreed.
And just to say, well, that was wrong, right? And change your mind and go the other way. And if people struggle to be able to do that, then this style of trading is not going to suit them.
Yeah, I feel like you have to, for this style of trading, I feel like you have to really know when you're incorrect, and like if you're not approaching it like we mentioned in an objective manner, then you can be left holding a bag because of your stubbornness, if that makes sense.
Yeah, exactly.
Yeah.
Exactly.
So,
like, I used to do a lot of intraday trading, and it just made me sick, man.
I remember
it actually
from
made
last
me
year.
physically ill.
Yeah, yep.
Right? Where, I was going to hospitals and see doctors and stuff like this and what have you, man.
Yeah. It's tough, man. It's not
tough,
easy.
man. It's like, like you're making a lot of money, but you don't always kind of realize the stress burden that you carry when you're risking a lot of money on a daily basis, right? Especially on these really, really micro moves. And the thing that you have to be careful is that as you get older, that catches up on you really, really quick, right? So, I had some really good years, right? But I had to force myself to transition onto higher time frames. But once I'd done it, I never looked back.
Yeah.
Right?
Makes sense.
Stuck with that because to me, it's kind of, I'm taking less trades and I'm making more money with the same risk.
That's where, like, just to add on that, that's where most of when I'm doing like spot trades, it's like higher time frame. So like these intraday trades, I'm just risking a small amount.
Yeah, it's something I think a lot of people sometimes do it just to stay engaged with markets and stuff like that, right? But dude, I'm you're saying small amount. I know how much you trade, bro. So
it's like $10, bro.
Yeah, he's just being humble, man. Like this guy, man, you don't know the trade sizes he hits.
No, it's $20, bro. Come on, bro.
Ninja's a real one, right? Straight up.
Nah, bro. $20, man. Don't lie to these people.
$50, bro. Be honest with these guys, man. I just told them you're a real one, right? $50, isn't it? $50 per trade.
50 per loss. Yeah. We'll keep it like that. Do not lose more than 50, bro. I'll get tilted.
Yeah, wife will kick you out, bro.
Oh man. Oh man. Yeah, there was a saying I read like only tell your wife about losses, right?
Is
So,
it, bro?
I heard that somewhere, man. It's funny, bro.
Dude, you don't tell her about the wins or the losses, man. Just tell her, yeah, we're doing okay.
Oh
Summer
man.
holidays paid for. Don't worry about it.
Yeah, not when you lose like 10% on one wick, bro. You know.
When you go to borrow money from your in-laws, tell them not to tell her.
Yeah, there you go. My
Easy,
in-laws are broke,
easy.
so doesn't really matter.
Do they trade crypto as well?
No, I'm joking. So
Yeah.
let's just see. I know my audience is a bunch of degens, but do you guys have any questions to ask? You know, Will while he's here. You know, because people they're just gonna say entry TP, bro. Come on, man. Better questions than that. Although I did see a good question yesterday on a tweet. Let's go to it. So first we'll ask you this, and then I'll pick one question, you know, from the chat. There was a good one here. I saw it somewhere, right? I'm like, look, this is what I said. Reply with any questions. No questions, right? But I saw one. Okay, this one here.
Well, I'm pretty sure we've probably already answered every question that
Let's
anyone
see if
could
the okay.
Yeah.
One by my boy Trader Myers. I don't even know who this is. If you could travel back 20 years to revisit your younger self, what's three things you would tell him to, you know, exponentially accelerate his trading process? We kind of did answer it, but
Yeah, I mean, you know that is going to be such a long answer, man, and
shit, we
I
might
want
spend another hour on stream.
yeah, we're
If you
going to
had to
need to.
summarize it in about less than 1 minute, what would you tell yourself 20 years ago?
I would tell myself, hey, man, this Satoshi guy is going to write a white paper on Bitcoin, start mining as soon as it comes out. I said, buy Apple stock, buy Tesla, right? No, I mean,
Yeah.
like, you know, look, there is no time machine, man. There's no time machine, right? I think what you've got to kind of think is the time machine is going forward, right? You've got to think, look, what can I change today,
Mhm.
which will alter my future,
Yeah.
rather than thinking, you know, what could I have done differently 5 years ago or 10 years ago, or anything like that. But and there'll be so many advices, man. But you look, if you're going to be trading, you need to study the market environment. You need to then have a strategy. Strategy is secondary.
Mhm.
Market environment is primary. I think
Mhm.
that's absolutely key.
Yeah.
You can't mention the word risk management enough, right? But you've got to learn to manage your risk, right? And you know that's kind of what I learned in 2008, right? Is you got to learn to manage your risk, and if you're not managing your risk, then the market will take everything from you, and it's literally you're turning up to the casino with your entire net worth, and you're putting it on one hand, and it doesn't matter, even if there's a 99.9% chance of you winning, that 0.1% will take everything from you, right? And so, when you're trading and you're trying to make money deliberately, the game is played in a certain way. So always be mindful of your risk. And then the final advice would be, there's this guy on Twitter, right? His handle is wmd4x. Track him down, right? Follow
This
him,
guy.
listen to him,
So
take his
somebody in the
advice,
chat said
do
they
his
want to
course.
yeah, they want to know if you would do a discount on your course.
Or do a discount on my
You
course.
gotta have like a 10, 20, 30% discount or something from my degens, man.
For your people. I
Yeah.
don't know, man. Like, have they not heard of the cost of living crisis? What's going on? What's going on? Listen, man, degen traders got to eat too.
Yeah. So basically they could find your course. Wow, you have the stream with me on your website, bro. You made me famous, man. Nice, man.
Yeah,
This
man.
stream was good.
That's the last movie we did, man. That
You know,
was
that's funny. That was the last stream I did with someone. Was the one we did.
seriously
After that
wow.
one, it was like I can't
So
do no more, bro. It's like
you've been on sabbatical for a whole year.
yeah, bro. It's like it's been a
That's
while.
literally that's more than a year ago, right?
Yeah,
That's
yeah. So I haven't
a
really
year and
interviewed
a
someone.
year and a half now.
Yeah.
That
So
guy, yeah, I've seen people go saying this stream's long, right? We've been on for maybe two and a half hours. This is nothing,
yeah,
right?
we did four and a half the other time.
Go
Yeah.
back and watch the last stream. It was 4 hours,
Yeah.
right? This is nothing,
4 hours.
right?
So the easiest way is to just sign up to your course. And is it like
It's not,
coaching?
It's mentoring, coaching. So
And do you have
I have
like
a
a
coaching
private
program.
discussion group with the people
So,
in
no,
it?
so that's tutorials. But if you go back and you scroll to the bottom of, you go to the bottom of the homepage, you find details of my coaching. If you
Oh,
just
okay. So
scroll
this is
down,
like the.
that one,
Oh,
legacy
okay.
independent creator coaching program,
See,
right?
look at the
So
price of that, man. That's
yeah,
for the
yo,
real.
yeah, people want to discount it.
Yeah, I see. The pricing here is like you already have to have a good understanding and some good money to get on this. But you do one-on-one coaching, okay?
It's one-on-one coaching, right?
Yeah,
And it's in fact it's a full year mentoring program, right? And
yeah,
I think what you have to kind of think of is really that look, when you're being coached and when you're being mentored, um, you- uh, what you kind of if you kind of look at the cost of not doing something like that, right? People will spend years and years
hmm
on that trial and error format of kind of trying to move forward, and I think that when you're on a coaching program, it just accelerates the process, right? And
yeah.
you end up learning the right strategies, and you start learning the right time to be applying those strategies, and you end up getting handheld through the process. It's not going to suit everyone, but if if that suits you, then connect and we can work something out.
Okay. So all you gotta do is shoot a DM. That's it. So anyone that is interested, just shoot Will a DM. Post his
Yeah,
Twitter here.
there's an email address on the
I mentioned
website.
it before. Like,
Yeah,
if I had to do coaching, I would probably 100% go to you. Like, and there's people that tell me like why I don't have a pay group because like I feel like still I'm learning. Why would I? I see many people start paid groups and like coaching and stuff like that, but they've been trading for 4 or 5 years, right? Right. The difference is 17 years versus 4 or 5 years, and I look at myself from trading last year. I improved a lot in terms of understanding, you know, stuff in the market. So like I feel like I still have a long way to go, to get on that level where I feel like, I'm unstoppable, basically. Even though I feel like that now, but I still know like I'm not there yet. So definitely shoot Will a DM. He got the courses as well. And yeah, like is there anything else you want to talk about as far as like, charts, um whatever,
so,
man. We out here. We could probably stream for another 30 minutes or so.
yeah,
Whatever.
God,
So
yeah. I don't know. There's not that much else that I'm actually looking at right now, right? So I'm looking at some FX, and I'm looking at Nvidia, right? And
can you do like a quick SPY analysis on the ES?
ES, man. Again, it's like I think that. All right, if we go, let me just go to my ES chart, right? So, um, I have some levels on ES, but they're kind of top secret levels, so they're not showing on my chart.
Top secret. Can't show them
So
the real diagonals.
there's a real proper top secret levels, man. They're top secret levels, right? So they're not. I mean, uh, they're not showing on my chart, but that is literally my ES chart, right? There's actually nothing on there. Paul Tudor Jones started buying, right? And some of you guys, I don't. It depends how closely you stalk my Twitter timeline, right? But I sent out the clip of the interview where he talked about that he was buying, and like the dude's never wrong, right? Like when he puts stuff out, you've got to kind of pay attention, and it's really easy to
Yeah,
ride his coattails. But he was buying here in the 4100s, right?
4100s.
Around about there, and he was saying he's expecting the market
hmm
to hit the historical high this year. He's expecting equities to close on a high this year,
Ah,
right? Well, the market is up 300 points since he said it,
yeah.
right? So you got to be a little bit careful with this one because if you're selling ES, just think about who you're fading. Right?
hmm
You're fading
But what if he
40.
already sold?
And if you've already sold, you're effed, aren't you? Right? But the big picture is, his big picture view is the same as Stanley Druckenmiller and everyone else, right? Which is what they're actually expecting is for ES to go into a multi-year range, right? Which means you might get a higher high, but it won't be significantly higher, right? And so actually, what you're much more likely to kind of see is over the next decade for the price to range between, say, 4,800 and 3,800, and just to maintain that. But no one is kind of looking at a macro environment where there's gonna be this kind of indulgent growth that happened during the Fed-led QE program, which you can see on the left-hand side on that chart, right? It'll be, price is going to remain in the 20-25% range from highs to lows, right? So if you do want to sell it, I would wait. I would wait until she's maybe pushed for a new high or pushed close to the historical high, and then have a look and see what kind of signal your system is giving you at that point. But you can kind of see that breakdown now, isn't it? Right? It's like, we're looking at a chart and we're kind of saying, okay, regardless of what signal you're getting right now, is the market environment there that makes that signal a good signal, right? And that's the same, it's that same process framework that I approach every chart with, right? That look at the market environment first, and then think about whether the signal makes sense. And I would say right now, I would err on the side of caution because I know who's long.
Yeah, makes sense.
There's people you can fade and there's people you don't fade.
Yeah.
Right. And what you've got to remember is Paul Tudor Jones, he called the Bitcoin long at 8K, right? And he published this huge paper and he was saying, look, Bitcoin's going to go 5, 6, 7 times its current price, right? And he put 2% of his net worth into it, right? So the guy's worth 10 billion. You do your own math, right? Yeah. I mean, I've never known the guy to be publicly humiliated on a call like that. So I'm not fading him. I'll wait.
All right. So so a question from the chat. I forgot to take their questions, man. I'm a DJ. One question that I saw and highlighted was, what do you consider? Wait, what the hell? I can't even see. What do you consider looking at when it comes to trading environment based on intraday instead of swing? I feel like it was worded kind of weird, but
no, I kind of get it. So look,
that's a good question.
Okay, so, all right, this is it's more to that market environment is more to do with swing than intraday. It's much more of a consideration. If you look at the intraday strategy that I've given, it's a very crude breakout strategy, right? And so the only maybe additional consideration that you need to have is why are you looking at the instrument that you're looking at, right? So if you're applying that strategy, for example, on Bitcoin, why have you chosen to apply it on Bitcoin today? And the consideration there would be, and this is what's really important to understand, is volatility, right? That the more volatile an instrument is, the more likely it is that you're going to have a breakout, which is a big breakout, right? And what we're trying to kind of ascertain is the connection which we're making is volatility equates to the size of an intraday move. And when you're trading a breakout strategy, the more likely it is that you're going to have a large intraday move, the more likely it is you could make money from that strategy. I hope that kind of logic follows, right? So the real question becomes then, how do you anticipate volatility, right? How would you anticipate that today we're going to have volatility on this pair compared to another pair that we could apply the same strategy to? And in that regard, the kind of things that I look at, kind of very simple things, but I start with Newton's second law, right? Which is just that, if something is moving, I will assume that it's going to keep on moving. And if something is stalled, then I will assume it's going to stay stalled, right? So by way of example, if you're kind of looking at alts over the course of the last few weeks, when you saw Aptos flying around, or when you saw Pepe flying around, or Tomo or RNDR, or you kind of see these alts flying around. Well, there's volatility in that market. So if you're trading a breakout strategy in those markets, you're more likely to make money than if you're trading a market where the price has stalled and it's been going sideways for the last 6 weeks, right?
Yeah.
So it's these very simple, basic.
So looking for volume,
logic,
basically.
right?
Yeah.
Well, you look at a chart and you can actually see what's moving, and you can see what isn't, right? It's a visual guide that you would have, but you can actually see what's moving, and you can see what's stalled. And so I'm always attracted to wanting to trade stuff that's moving, right? So it's like, this is like, I kind of posted this chart on my Twitter timeline, right? And the price when I posted it, I think was somewhere around maybe the 400 mark or something like this. And I was, the point I was making was, look, let's try and predict where the high of Nvidia is going to be, right? And so I posted my channel and I said, this is where I think the high of Nvidia is going to be. But the question is, why am I looking at Nvidia in the first place compared to any other chart, right? And the reason is, if you look at that chart, what you see is volatility, right? What you're looking at is a secular trend. What you're looking at is empty space on the left-hand side. What you're looking at is a chart where price is making higher highs, lower lows. And that is a template of the type of chart that you want to be trading. You can cover up the ticker on the top left-hand side, and you can cover up the price scale on the right-hand side, right? Does it matter that it's a stock chart or an FX chart or an indices or a crypto or an altcoin or whatever? Does it really matter, right? This is the type of chart that's tradable, right? And any chart that does not look like this is actually exceptionally difficult to trade, right? It becomes a coin toss. Whereas here, I know I can get breakouts, I can get reversals, I can get expansions, I can get contractions, because there's actual money in that market and it's visible on the chart itself. So I don't know if it's been like a kind of very straightforward explanation. It's not a mathematical thing. You get used to looking at a certain type of chart. If you go back on my Twitter timeline, and you can actually go to the homepage and you can click media and you can scroll down and you might find charts that I've posted in between the memes, right?
Yeah.
But if you look at all of those charts and you covered the ticker and you covered the price scale, you wouldn't know that it's a different instrument. You think you're looking at the same chart, right? And that's literally how I trade, right? You can't have consistency in outcome if you don't have consistency in the chart you're looking at, consistency in the technique you're applying, consistency in your execution, right? You need consistency in your risk management. You need consistency in all of those things to have consistent results, right? And whereas if you're trying to trade 50 different setups and 50 different types of market environments or what have you, and then trying to develop a process and think you're going to get a result, good luck, right? I found one, right? There's one kind of thing that tends to work very reliably, and it's all to do with volatility and momentum. So even on an intraday chart, that's what's going to matter. The more you're able to detect that, the more you're able to anticipate that, the better outcome you're going to have, right? And if all you ever find are these range-bound markets, and I didn't want to say it, but I'll say it. What happens is this. I'm being really careful because I almost feel like I'm waffling at this stage, right? But what happens is this, right? Honestly, people want to feel safe, right? And so they look for charts where the price is not moving because it makes them feel safe. And then they take a trade and they lose money, right? And I have one word for that, right? Which is pussies, right? Because if you want to make money, you need to adopt and embrace volatility. You have to.
Yeah, for sure.
For the chart where price is flying, it makes you feel scared. You will be terrified, right? And if you position on it, you will make money. And that is literally the difference between people who make money and people who don't, right? That you go looking for volatility and you jump on, you can make money. But a chart that's going sideways endlessly, right? Time will stop you out more frequently than your stop loss ever will. You're going to hit a position and you're going to sit on it. And it's going to go a little bit in money and a little bit out of money and a little bit in money and a little bit out of money. It's going to waste weeks and months of your time. And then you're just going to close the position yourself, pay the execution cost, pay a stop. And what, but you know, you're no closer to actually your objective than you were when you started in terms of trading and making money and stuff like that. So you've got to go looking for volatility. That's what you've got to be on kind of constant hunt for. That's the type of chart that will pay you, right? Whereas if the volatility is not existent, leave it alone, right? And that's why I'm kind of more interested right now in looking at USD/JPY. I'm more interested in looking at NVIDIA. I'm just looking at stuff that's moving. I don't want to look at stuff that's kind of going into going into consolidation.
Yeah, I don't really trade Forex, but I see USD/JPY is like scamming right now. What kind of scam short squeeze is this?
Sure,
this is
but
crazy.
like, look, I mean, you look at that chart and then you look at NVIDIA and tell me the difference, right? It's the same chart, it's just a different name, a different price scale, right? But where an instrument is moving, it can expand and it can contract, and there's going to be opportunity, right? But where something is going sideways, right? You know, whatever you're doing, it's a best guess, right? It's a range band play. Someone's going to be on the long side, someone's going to be on the short side. Both of you are going to get stopped out. Right? And so, you know, I prefer these instruments where there's been a secular trend. And I can tell when that trend is kind of petering out, and I look for the swing reversal opportunity on it, right? And it's like, even this chart, right, is like someone commented on Twitter, so some prick, right? He's like, oh, you know, you missed the 300% move up to get the 7% move down, right? But bro, you know, if I've caught that at the high in a risk-defined way, it's a trade, right? I'm not an investor, right? I'm a trader, right? If I catch any part of a 10% move, that's a win, right? Compared to not have, you know, compared to never catching anything at all, right? So, but in any case, it's usually the people, when you look at their timelines, they've never called a trade in their lives.
Yeah, it's a lot of people don't understand, like, you know, but it is what it is, man. I get trolled all the time, but when I post like an equity curve, like I take more longs than shorts. It's funny.
Yeah. So,
but yeah, I get
social media is its own game.
Yeah, man, it's like too many trolls. But hey, that's what comes with I guess Twitter, right?
Yeah, comes with the territory.
Yeah. So let's see. Just looking if there's any interesting questions, man. If the chat has, we'll do one more question and then I guess we can wrap it up. You know, because I know myself. We could talk for another couple, like 2 hours and stuff, right? There's always stuff to talk about, man. You know what I'm saying? Especially when I'm waiting for the market to come. But I'm looking at questions and somebody asks the bottom end, man. This is the type of questions we get, man. You know what I'm saying? Will Hunting says they're gonna take this low, and I tend to believe him, man. Yeah, man. Me personally, I think at some point the market's gonna come back to this level, but until then, it's like you have to try to objectively trade the market for what it is, in my opinion.
Yeah. No, I think it's, well, from a swing perspective, it needs a little bit of care right now. Like, there's a part of me that still believes 18K.
Yeah.
Right? And I think fundamentally, the market's a bit mashed, right? It's like, you know, like when you look at everything that's going on, you got Gensler on the case with regulations, right? You had FTX go down. It took 20% of all the money in crypto with it. and now the IRS is laying claim to that money and saying you got to ask for it back from us. Right? No one is going out anymore and telling their friends, hey, you need to get into crypto, right?
Yeah.
There's no fresh money or fresh meat coming into the market. And then, like something that Arthur Hayes said a year back starts making sense, isn't it? Where he was kind of talking about, like you got to look at how much money's in the ecosystem, and you got to look at the market cap. And when and then when everyone's trying to get out, you try and squeeze an elephant through a door, right? And you'll only be able to get the equivalent of the money in the ecosystem. You'll never be able to get more than that. It doesn't matter what the market cap is. So it's like if the crypto market cap is like $100 trillion, but there's only $100 in the ecosystem. When you cash out, that's all that's cashable, right? The market will drop to those values, and I think that, and I think that, I don't know. It's like you got to be looking at the prices, and I'm just kind of wondering how justifiable the market caps are, and especially with alts, right? The liquidity is not there. That there is no money in the ecosystem, right? And so whenever you see any kind of alt do this kind of crazy rally, you sit aside for a little while, let that rally peter out, and then just fade it.
Yeah.
Right. Because
Agreed.
in the long run, all those alts are going to zero. It doesn't matter what they are.
Like this alt right now, comp. Talk about
yeah,
it.
like
These,
like,
I have these on my list. I'm ready to smack Bitcoin Cash, comp. I'm just waiting for the right time.
Yeah, it's like I'm looking at Tomo, right, and I think that's gonna die.
Oh my, yeah. Look at this coin right here. This is brutal.
Yeah.
What happened?
That's gonna die.
Oh my god, what's going on?
No, it's over, man. This is over. Any rallies in that, you can just sell it. Right?
Yeah. Oh shit. Yeah. This is.
And even
70 million in open
I
interest.
don't know if anyone's gonna want to hear this, right? But even Atom, man,
But that's crazy.
Atom is looking like shit as well, right?
The Tomo chart is crazy, man.
Tomo is just dead, bro. It's finished.
Bro, that's crazy. Look at this.
And because you know what that last candle there is that technical definition of irrational exuberance, right?
Yeah.
So whoever was buying the high of that, they're effed.
Yeah.
I know that because I used to buy that freaking candle.
Yeah.
Right? So
I was watching this to fade it. Honestly,
this market's going the other way.
I wanted to fade it, but I wanted it to run liquidity above here. But this is brutal, just straight down only. That's crazy. This is crazy.
I mean, you can see it, right? So it's like it's on that chart, right? But if you're looking for something mid cap, I think Atom as well, right? So it's like with Atom, I think there's going to be a little bit of caution, right? Because you want to kind of rally and to be able to sell into the rally rather than selling it as it falls necessarily.
Yeah, this is kind of weak compared to like.
Yeah, I think see that spike bar that went to the lows, right?
Yeah.
I think that area.
It's
so
gonna
seven is going to get revisited.
Yeah, I agree.
Whether she's going to do it from here or whether you get another kind of push up and then it rolls over after stalling sideways or something like that, that kind of remains to be seen. But
like this is like a resistance, a support that broke still untested 156 days. So I'm even gonna put alerts right here. If a scam waits into here, that's the cue right there. Wait for the reversal right here.
Yeah, like like I said, with the alts, I think there's a kind of inevitability about it, right? I don't think you just have, they're all scams, man. They're all scams.
I think this one is gonna get shit on, Bitcoin Cash, like. Yeah. So I'm gonna be watching this intraday. So like I think the next level is this level here. So I'm probably just gonna blindly fade into if it legs up like this.
I would mark diagonals off of that same place that you marked the zone off of.
Yeah. Let me see. See if we could get a will diagonal.
Yeah.
Let's see if we could get the will diagonal. All right, hold on. Let's see.
I will show you. If you look at you can see my screen.
Whoa,
right?
buddy. It's gonna go to 400.
You,
hold on. Sorry, I got a call, but you can keep going. I'll share your screen. So
that's my RNDR Randall network or whatever the heck that is, right? But the chart that Ninja was showing you was Bitcoin Cash, and so the structure where he's marked his level, you use that same structure, you'll get this kind of reverse support resistance shoulder wall backtest level off of it, and that's where I'd be looking for the rejection from. That's his pizza delivery guy. That's who that is. Yeah, this guy doesn't mess with don't mess with Ninja and food.
GG, man. That's the wife, man. It's over.
It's
over,
hey,
man.
does she know about us? Is that what it is? I should find out.
So you were looking at RNDR? Okay,
Yeah.
I see the diagonal there.
You see that kind of diagonal? So
Yeah.
like you've got that similar structure there.
Oh, so you? Oh, wow! Look, that's a
there you
deep.
go.
You're trying to liquidate me, bro.
Right? So now you just need to drag that down. You need to use a channel tool, right? But
so I'm gonna drag it down like this.
you need to drag it down.
So it could give me.
Yeah,
Well, yeah, that's.
Yeah, it'll be a bit like that, and then you need to go into a log chart, right? And just press hash L or something, Alt L, right? You'll end up on a log chart, right? But a back test or something like that would be my ideal trade.
Yeah, I see.
If she goes there, man, it's a thing.
That's beautiful, right? Yeah.
If it doesn't, it's okay, right?
Yeah,
but
agreed.
That's where I kind of look for support resistance, right?
Yeah. So yeah, I'll just wrap it up, because you know how it goes, man. The wife, man. You know how it goes, man. You're married, man. So just to wrap it up, like, is there anything you want to discuss before we end the stream?
No, we're good, man. We're good here.
We're good. You're good. All right. You're good. You guys heard it. So I definitely would love to have you again at some time. So definitely. I'm gonna spam you until you reply when it's time to get you back on stream. But
what are you saying, man? November 24th?
Let's do it, man. Let's do it again in November. Let's go.
November 2024, man. Cool.
Let's go. November, we can set it.
Every 18 months, guys. Put it in your calendar.
No, but yeah. So, all seriousness, I'm gonna post Will's link in the chat. Twitter is there. You can go follow him on Twitter. You can check out his course, check out his material, and just DM him if any questions. But I hope you guys found value in the stream, and you could say your goodbyes. I will stay on stream a little bit longer just to wrap things up intraday, but you can just tell the D-Gens goodbye, and then
thanks for showing up, guys, and having a listen, and I'll just leave you guys here, man. I'll catch you later, Ninja.
All right. Thanks again, man. See you.
Peace. Bye-bye.
All right. That was our boy. Solid stream. I think the replay will be cool. So yeah, what I'll do now is just gonna wrap things up. I appreciate everyone that actually stood here till the end, man. It's a long stream, but I feel like these type of streams, they're good because you can just listen to it when you're on a ride, like when you're driving. You can just listen because it's more so like discussions and a lot of things that he said. If you replay it, you will kind of understand like the logic behind what he's talking about. And I think like a lot of information is helpful for all types of traders. It doesn't matter if you're profitable. You can listen to his stuff and it'll still give value, right? So with that being said, I just want to wrap things up. So I kind of gave the idea of this trade. So we'll just take a look on this chart over here, and I'm gonna give a just intraday play I'm watching currently, and let's just go from there. So basically, if you guys remember, I said there's going to be trap shorts here. There's going to be more trap shorts here. So right now, they're currently still trapped. So what we're looking at is a move above this level that is going to take them out of the market, and then we can play a short to the downside. So until we get this move that takes them out, I will just be simply waiting, and I'll be more interested if the market, you know, maybe runs this liquidity and then rotates back down here, and I can see that they're still in the market. I'll be interested to take scalp opportunities here. You know, just scalping right now. As far as like Ethereum, as you know, I kind of bombed my spot position on this, but I think the setup is still valid to where basically, you know, we had the break of structure here on lower time frame back into the resistance here. You can see this is a resistance level. It was support, now it's acting as resistance of a, you know, about 6 to 7 day range, and we rejected right away. But if it accepts above this level, then I think we can see like a move that's gonna run this high right here. So I'll be looking, you know, for something like that, and that would tell me that Bitcoin is ready to run some topside liquidity on these wicks. And you know, the swing position, it hasn't changed from last stream. I think I said I'm really waiting to swing a fade above this level. If we see lack of momentum, I would be looking to swing above 31.5k. As far as these plays right here, they're just more intraday. I'm going to be reacting to the market to play a few points. Like if we fail, you know, momentum from this side, then I'm going to look to play it back for a couple of points. We can see the breakdown exactly at this level here. If you pay attention right here, we had the breakdown, the move down, failed to hold, and then again we rejected. So if we take the high and don't reclaim this level, right, then I'm going to assume that we're going to go back into balance, which is going to be, if I remember correctly, it's going to be like 30.6 to 30.3, right? That's going to be the balance of this range. And yeah, that's going to wrap it up for this. And yeah, as far as Ethereum, basically like this, if it's going to reclaim back above this level, then I think at minimum we'll get a push towards 1905, and eventually to take out this triple top right here and, you know, nuke shit, right? So that's that for that. And you know, I'm just gonna wrap it up. The stream is brought to you by OKEX. So if you want more of this type of content, then you can pretty much sign up. I just did copy trading, so if you sign up with my link, you can find the link here, right? You could sign up over here and copy trade me like this. So let's just take a look. I've been kind of trading it today. I took like less of a break because like I went overboard just to like get some profits. If we can see, I'm probably down right now on the positions, right? So let's just take a look. So right now, okay, so 75%. So I started, it's a DGen account, by the way. I just want to let everyone know that copy trades me. It is a DGen account, so it's high risk, high reward. So if you copy trade me now, just know I kind of got up to like 85% of the account so far. So I'm willing to risk these trades on higher riskier trades. So like copy trade me at your own risk, and just know, like, do not put capital that you want to lose, right? Because there's people that copy trade me, they made money, and I don't know how it works, but these people lost money even though I have not lost money, right? So I don't know how the copy trading works, but what I can say is sometimes I'm opening more size. So if you have like a $200 account, you won't be able to be in the same position because I'm scaling into the position, you know what I'm saying? And right now I have algorithms running, and you can see these are my open positions right now. Like the algorithm has a short from 30.7, and basically I'm scaling into these positions. So like and the minimum size on OKEX is going to be like $300, you know, so you have to be careful. But yeah, you can copy trade me there, and we'll see how it plays out. As far as intraday, you know, just patiently waiting. I'm gonna wait for a run of this highs, and if I see there's no momentum, I'm gonna fade it back to balance, which is gonna be something like this, right? And then I'm gonna look to buy these dips going into Friday if these traders don't get out the market, which I think what we're seeing now is somebody is trying to get them out of the market, right? I haven't did the math, but That's what we're seeing. So that's gonna be that. Appreciate everyone that has tuned into the stream. And until next time, don't get wrecked. Peace out. And this stream will be on YouTube. See ya.